And here are your top stories. Credit Suisse sees clients pull over 61 billion francs from the bank in its first earnings since the UBS takeover deal. We are live in Zurich. US and European futures fall before data this week that may illuminate the path forward for interest rates. Treasury yields tick lower. Plus, the Chinese embassy in France pulls a transcript of an interview in which the ambassador questioned the independence of former Soviet states, remarks that unleashed fury across Europe.
Tom, so we put, of course, all of that geopolitical concerns on the markets. If you look at futures, they're seeing a little bit of pressure. They're all also, just in general, a lot of market participants trimming some of the risk levels. We have a lot of data. We look at earnings. If you look at earnings in the S&P 500, I think we had 20% reporting, and about 30% of those were better than expected.
Yeah, absolutely. The positivity coming through for earnings, of course, that picture continues through the week as well as investors trying to get a grip on the forward-looking earnings picture. It is tech that is in focus this week. You have the likes of Microsoft and Amazon and Meta all reporting, but of course banks as well. European banks front and center. We'll get the details on Credit Suisse just in the next couple of minutes. Across the open then, this Monday morning, the FTSE 100 down 0.4%. We'll zero in on basic resources in just a minute or so because commodities, and this is a theme from last week, taking another big hit, looking at oil and iron ore in particular. Over in France, the CAC 40 down 31 points. Spain and the index there off by 0.4%. So it is risk off this morning across these European equities, at least in the first few seconds. Again, as we weigh up the data as well and what that's going to tell us about the Fed ahead of that May 2nd, May 3rd meeting. Let's change it on then and see how things are shaping across the futures in the US, but also, of course, at the yield curve. And you are looking now at hedge funds putting the biggest short position on benchmark treasuries on record, 5 straight weeks. The 2-year currently at 4.15, that's a move of 2 basis points lower. Futures looking to losses in the US of 0.5%. And here's the picture on commodities. It is iron ore, again, that's feeling the brunt of the pressure, the selling pressure on weaker demand coming through from China, getting down to that $100 level, currently off 4.4% on iron ore. Bitcoin also in focus for us today, 27,525. Not a lot of movement in the trading session today, but there's a Bloomberg story on how the halving of Bitcoin next year could propel prices to $30,000 as we're at now, but could it get up to $50,000 around 2024? We got to that 30,000 level. We're back down to 27,525, but that forecast and the estimates may be $50,000 next year on the halving of that main cryptocurrency. That's a check-in cross-asset, Fran.
Yeah, if you look at the pressure that we're seeing in a lot of these commodities, including iron ore, it's dragging basic resources down. So if you look at the industry groups that are falling the most, energy, I also have basic resources, banks down 0.7%. Actually, there are 20 industry groups making up the stock 600, and only 3 of them are up. It's healthcare, construction, and real estate. And then again, they're gaining only 0.2%.
Okay, let's get to the banking story. And of course, Credit Suisse front and center this morning, reporting first quarter outflows of more than 60 billion Swiss francs. The figure underscores the challenge for UBS in retaining key clients and assets after the emergency takeover of its biggest rival, of course. Let's cross over then to Zurich with our colleague Manus Granny, who is on the ground for us. Manus, what have we learned then about these numbers?
Tom, the fog of war in terms of the outflow from Credit Suisse is far from over, and the rich don't hang around. We know that. We saw that in the fourth quarter. So just to give you some kind of perspective, in the past 6 months, 170 billion Swiss francs has gone out the door of Credit Suisse. Where did it go to? There was no massive bump in the UBS numbers at the end of the fourth quarter. That'll be question 2 or 3 to Amati tomorrow when we sit down. So the all clear has not been sounded in terms of the deposit outflow, or asset outflow. And here's the subtle differentiation. In those very asphyxiated moments of deep angst, the one thing that you can do like that is move deposits. 57% of the 60 billion that went out the door from Credit Suisse was deposits. Deposits can be transferred in the process of SWIFT and very, very quickly in the space of hours. Deposits can leave your bank. Assets, which are structurally adhesed to Credit Suisse, take longer to move. And they have said very clearly, more losses will come, more substantial losses will come in wealth management. They had to draw down on liquidity lines from the S&B, over 100 billion Swiss francs. The dissipation of assets and deposits might be stymied for now, but assets is still an open-ended question, and liquidity will still be needed. This is far from over, and that's a warning to Amati Kelleher and Iqbal Khan.
So first of all, Manas, I'm really excited about your interview with Sergio Amati tomorrow, but how much does this complicate things for UBS? They have so many guarantees from both the S&B and the government. Can they deal with anything that's happening at Credit Suisse?
You bang on the money. They have deep pockets to where the losses that may come from winding down the investment bank. That is where the real pain trade comes for the trifecta of Amati, Khan and Kelleher. So they have their own pain trade, which is 5 billion, 9 billion from the government. So that's what's in reserve there, Francine. And the speculation at the moment is that still an unknown quantity, but they might not burn through all of it. The issue is this: Iqbal Khan is on the road. He's got to convince not just capital and assets to remain within the bank, but you need to convince human capital to remain. The long-term incentive programs are on the floor. You need to get the rainmakers who can turn the keys on these assets to stay. That is the real issue. But for now, 60 billion going out the door isn't anywhere as dramatic as some of the market had speculated. Citi had a number in for 100 billion. But overall, it's not a good picture, is it? You know, 9% of the assets go out the door in the first quarter, and we're far from done with this.
Yeah, that's the world we live in now, where 60 billion in outflows is not as bad as it could have been. Manas Grandi on the ground in Zurich, of course, will be there for us the next couple of days with some important interviews as well around the Swiss banking turmoil, of course. Now, hedge funds, Francine, and a look at what is happening as we lead into a discussion with Peter Oppenheimer of Goldman Sachs. Of course.
Yeah, so they've boosted their net shorts. We're talking about hedge funds. Their net shorts in the S&P 500 to a 12-year high, according to data from the Commodity Futures Trading Commission. The industry also has its biggest ever short position in 10-year treasuries. Well, joining us now, as Tom anticipated, Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs. Peter, so great to speak to you on an important day like today. Overall,
thank you.
Earnings have been quite good so far. Are you, optimistic that we're not going to see worst-case scenario for the economy?
We are, and we have been for a long time. We think that all of the major economies will avoid recession. We're talking about weak growth below trend, but we don't think recessions are likely across the US, Europe, or most other major economies. And for that reason, we don't expect earnings to collapse, but we do think that earnings are going to be pretty pedestrian over the course of this year. So it's a balance of modest growth, but positive, and not much going on in terms of corporate profits, we think, overall.
But pretty pedestrian in terms of the picture for equities. When you zero in, Peter,
Yes.
on the tech story, and we have a reporting, a Bloomberg piece today on the upside that we've seen, particularly in the IT index over in the S&P in the US, up 19% so far year to date. Does the tech rally look overdone to you at this point?
Well, I think that I would say two things here. First of all, the tech rally in part, of course, has reflected this big shift down in interest rate expectations as investors get more optimistic that with inflation peaking and coming down, interest rate cuts are not far away. We think the optimism about interest rate cuts is premature. And for that reason, I think there will be some constraints on tech moving forwards. But the second point I think to emphasize is that big tech is relatively defensive. You've got strong balance sheet companies, highly cash generative, with relatively stable growth. And that's the characteristics that people have been hankering for in what's been a relatively uncertain environment, both for the economy and for inflation. And it's for that reason not only big tech has been doing well, but other strong balance sheet, stable margin, defensive parts of the market have also prospered in other markets as well. And we continue to like those.
So, Peter, when you look at big tech, is it less about implications from inflation normalization and more actually about what happens with AI and how it could displace a lot of these big tech companies in 3-4 years?
Well, of course, the history of technology has always been about innovation, and very large cap tech companies have not typically remained the fastest growing over time as new technologies come through and innovation generates new leaders. That being said, of course, some of the big tech stocks at the moment, because they have so much cash, they're investing aggressively in these areas of new innovation, and some of them may well, continue to be leaders in that area as well. So I think it's a bit of a balance here. Clearly, the drive in technology is shifting a little bit from what we were seeing over the last decade in particular. But it will create, I think, lots of opportunities for tech companies and indeed for companies in industries outside of the tech sector, which can use that technology, AI and others, to improve efficiency, productivity and margins. And we're looking for companies that can sustain and generate higher margins really on a sector neutral basis. We think a lot of the focus will be on margins moving forwards rather than simply revenue growth, which was really the principal driver of return differentiation in the last few years as interest rates were very low.
Peter, you touched on the defensives story. Quality defensives on some metrics trading at a 60% premium to the European benchmark. Do they look a little overpriced? Is defensive looking a little expensive at this point?
It is expensive, but I think it's expensive for good reasons. I mean, our preferred way of looking at this in Europe is what we call the granolas. That's a mnemonic that stands for the names of the 11 biggest companies. And these really span across healthcare, technology, consumer staples and luxury. And yes, they're expensive, but they continue to generate very strong revenue growth and stable margins. They're cash generative, they're paying dividends. And just like the big tech stocks, they've become much bigger in the index because of that. You know, at the time of the financial crisis, those 11 companies were 10% of the 600 biggest companies in Europe. Now they're 25%. And so the European index is actually dominated by some very large defensive companies. And that's one of the other reasons why the market, I think, is holding up pretty well.
Okay, Peter Oppenheimer, Chief Global Equity Strategist. Very pleased to say, Goldman Sachs, of course, staying with us. We'll get more analysis from Peter just in the next few minutes. A redhead crossing the terminal now on the back of the numbers coming through from Philips. That stock rising double digits after recording provisions in its apnea recall. You have equity analysts coming out suggesting that as a result of supply chain snags starting to ease for Philips, that the prospects are looking slightly better. You're getting gains there of almost 11%. Shares gaining again on the easing of supply chain constrictions for that company. A strong beat in the first quarter. Morgan Stanley predicting that consensus upgrades of around 10%. They're looking at potentially consensus upgrades of around 10% for full year 2023 EBITDA for Philips. We'll keep across that story for you and other big stock movers in the session, of course. Now, coming up, we take a look at why investors think the dollar has only got further to fall as we dig into the results of the latest Bloomberg MLive survey. Stay with us. This is Bloomberg.
don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it. The product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
This is Bloomberg.
Earnings season is here.
We haven't had a shocker yet.
They are minting money.
Markets are still volatile.
I think it's going to be choppy.
Bloomberg breaks the numbers first.
First quarter results impressive.
The revenue beat is amazing.
With exclusive expert analysis.
This is really important to watch.
Buy on the fear, sell on the news.
Where is the upside in this market?
Do we get answers to that today?
The outline speaks for itself, and that's what moves markets.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
The medium-term trend is for a very aggressive weakening in the U.S. dollar because we unwind the stagflation trade of last year.
I do think it is a time for dollar weakness. We could be seeing the Fed peaking a bit earlier than other central banks, which means there are better yields to be had for that level of safety elsewhere.
Is it that slowing down U.S. economy is necessarily going to be supported for the dollar? Or is it that because people are coming back to U.S. Treasuries, that inflow actually makes a difference?
The strong dollar had been a headwind for emerging markets. Our view is that it likely does weaken from here because the U.S., in terms of interest rate hikes, likely one and done in May.
I don't really believe that the dollar can really weaken significantly. Certainly, I think it's going to be choppy. There's going to be bouts and risk appetite appears better. But I think we're in for perhaps a rocky ride still for the rest of this year.
Some of our guests there sharing their views on the dollar. That's the subject of the latest MLive Pulse survey, which shows how investors see the greenback sliding even further from last year's two-decade high as the market has underpriced the Fed's oncoming easing cycle. Now, more than a third of respondents actually expect the dollar index to fall by between 2% and 5%. Now, let's bring back Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs. Peter, I guess there are three main things that worry markets, and maybe they don't worry them to the extent they should. It's the debt ceiling, it's, of course, dollar and what happens to that, and then there's geopolitics, which is extremely difficult to price into earnings going forward. What do you worry about the most?
Well, I think there's a sort of timing issue here. Shorter term, the debt ceiling is an imminent potential risk, and we've seen in other periods where compromises are difficult to get to. 2011 was a very good example. The market corrected quite sharply. Of course, there were some other things going on at the time, problems around the sovereign debt crisis in Europe. But clearly, the market with current valuations is vulnerable to a problem on the US debt front ceiling in the nearer term. That being said, I think geopolitics and the changing nature of geopolitical relations and trade are an important feature of what's likely to drive the next cycle. And there are different ways in which this is being manifested, of course, but importantly, it is fitting with the narrative of some pushback to globalization. You've got growing geopolitical tensions, you've the effects of decarbonisation, of course, and the growing popularity of some more protectionist policies, Inflation Reduction Act, Europe's version of it, and so on. And these things, of course, will create positives and negatives for different types of companies, but they are likely to replicate some degree supply chains and increase costs, which will have a negative effect on margins and returns. So I think that's probably going to be one of the more important medium to longer term features of the next cycle, which would be very different from what we've seen over the last 10 or 15 years.
And Peter, part of that conversation around a bifurcated world also raises the question about the sustainability of the primacy of the US dollar. That's a longer term conversation, but in the months and quarters ahead, do you see further pressure on the greenback?
We do, in the near term, modestly. I think, again, there are two big drivers here. One of them is interest rate differentials. And for the first time for a very long time, if you look at forward differentials between, let's say, the euro and the US, they've narrowed quite dramatically. So the benefit that the dollar has enjoyed from having much higher interest rates is clearly fading. But over the medium term, we're seeing less risks than was certainly the case in Europe in the last decade, and more inclination, I think, amongst investors to diversify currency exposure to some degree. You know, I think that also, if you look at long-term fundamental valuations, the dollar has been relatively overvalued for quite a long period of time. Now, there are good reasons for that, and markets very rarely sit at fair value at any point in time. But I think over time, the direction is more towards a lower dollar against a basket of other currencies.
And Peter, you have some great research on real asset trouble, which is basically because of inflation normalization. And there's a difference between the headline inflation and the stickier components. We have a great viewer question that goes to this. How concerned are you, Peter, of a large debt refinancing in corporate bonds next year and the one after?
Well, overall, I think, you know, one of the things that makes us relatively positive and believe that we'll get soft landings is that private sector balance sheets generally are quite strong. You know, banks in aggregate have strong balance sheets, so does the corporate sector, and in most cases, the household sector as well. So in aggregate, I think it's less worrying in terms of systemic risks. But then again, we do have quite a lot of companies that have got a rollover debt. And of course, what's going to matter most is what interest rates are when that happens. And now, hopefully, by the time that you get most of these rollovers happening, interest rates will be somewhat lower. But again, this is a reason why we prefer up in quality expressions across the credit market and also equities as well, and looking and preferring across different sectors companies with stronger balance sheets in general.
Okay, the need to choose quality. Strong balance sheets, relatively optimistic there about the significance, at least the sustainability of those balance sheets in a higher interest rate environment, and the view that maybe there's a little bit more softness to come through, a little bit more downside for the greenback, and a pedestrian outlook for these equity markets. Peter Oppenheimer, really appreciate it as ever, Chief Global Equity Strategist at, of course, Goldman Sachs. Coming up, we're going to get stocks on the move, including Philips. We're going to have the details and plenty more coming up. This is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. In Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg.
Welcome back to the Open. We are 24 minutes into the European trading day. A lack of direction across these equity markets. Flat here in Europe. Futures pointing to downside in the US, down by 0.4%. Autos, energy and tech all under pressure as sectors. Autos down a full 1%. Healthcare, a bit of a safe haven bid there, getting 0.5%. Let's get to your stocks on the move, though. And our equities team, Joe Easton, standing by. Joe.
That's right, Tom. So we are starting in the healthcare space, looking at Philips over in Amsterdam. That one jumping at around 11%. Now, a lot of the headlines today were around the potential payouts for these sleep devices, with concerns around some potentially cancerous impacts and legal claims because of that. But people are ignoring that today, jumping over there in Amsterdam. This is as their EBITDA tops analyst expectations as some of their supply chain issues ease. That stock has absolutely slumped over the past year, given these legal claims. So we're finally seeing a bit of reprieve for Philips today. Meanwhile, I'm also looking at Software AG. This is over in Germany, got a massive takeover bid. They do data management for companies, client enterprise and cloud software, up 49% over on the DAX exchange. This is a bid from Silver Lake Capital, private equity, bidding €30 a share. It traded at only €20 a share on Friday. Investors, I think, taking the money and running today, given that this company is actually seeing a bit of a slowdown in demand as firms brace for a recession, potentially cut back on some of their projects. So this is a big mover today over in Germany. Meanwhile, in France, we got Vivendi. They had a sales update today. It looked pretty strong on the outset, some top-line numbers beating analyst expectations. But what we're hearing is that the Canal Plus business, the big French television channel, that is actually suffering slightly, revenue missing expectations. They're trying to do a bit of M&A, doing some deals with Lagardère, the big rival recently. And then that is kind of boosting their magazine business. But as I say, television, not the best one on that one. Finally, I'm looking at BP. This one down today. This is as commodities get hit across the board today. Brent crude futures down 1.4%. Iron ore slumping because of China worries. All the commodities firms are falling, but I've bought BP up. That's weighing on the FTSE 100, down 1.2%.
So many questions, and all of those we'll need to get you back, Joe. Thank you so much, Joe Easton there from our equities team. Coming up, we'll get more on Philips and bring you our conversation with the company's chief executive officer. That's next. This is Bloomberg.
Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people?
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Credit Suisse sees clients pull over 61 billion francs from the bank in its first earnings since the UBS takeover deal. We're live in Zurich. European stocks and U.S. futures fall before data this week that may illuminate the path forward for interest rates. Treasury yields tick lower. Plus, the Chinese embassy in France pulls a transcript of an interview in which the ambassador questioned the independence of former Soviet states, remarks that unleashed fury across Europe. So, Tom, if you look at the markets, also traders really trimming some of the risk out there.
Yeah, we started the session down about 0.3%. Those losses have been paired. We're flat now across European equities, so still really kind of lacking a bit of direction. Really interesting that actually cross-asset volatility is near the lowest since about February of 2022. Here's what's the picture then across Germany. The DAX down 25 points. The FTSE 100 here in the UK off by about 0.1%. And as I said, the benchmark here in Europe currently flat. Peter Oppenheimer of Goldman Sachs telling us earlier that he sees a pedestrian outlook for these equity markets, really wants to focus in on quality and still the defensives, even as they look pricey. Let's switch it over to see how things are shaping out across your sectors then. Commodities, again, basic resources, iron ore, really under pressure. Iron ore currently down by 4%, over 4%. Reopening, what reopening for this iron ore market? Close to $100 now. And that, again, on concerns around the demand impulse coming from China. Brent is trading at $80 a barrel and WTI at $76.90, down a full 1.2%. Across your sectors then, a defensive tilt towards utilities and healthcare, both of those sectors gaining. Autos, energy, tech, and basic resources all taking a hit in the trading session this morning. Futures in the US, though, pointing down by 0.4% on the S&P E-minis. Fran.
So this week, Europe picks up where Wall Street left off as the region's biggest banks actually prepared to report earnings. Now, we'll find out this week how Santander, Barclays, Deutsche Bank, and NatWest all fared in the first quarter. Let's bring in Bloomberg's Leo Kenscherper on European bank earnings this week. So, Leo, good morning. Thanks so much for joining us. What can we expect from major investment banks? I mean, I don't know if they're major, but certainly they have an investment bank component like Barclays and Deutsche Bank.
Yes, so it's going to be the fixed income traders who will be in focus when those banks report on Thursday. Revenues from fixed income trading are expected to drop by about 10% respectively in the first quarter. And this is, of course, because of the strong comparison those traders have faced compared to last year when their clients navigated the turmoil and the volatility caused by Russia's war in Ukraine. So any positive surprise here could really help Deutsche Bank and Barclays shares on Thursday.
We also have NatWest this week, of course, heavily exposed to the UK, the domestic UK economy, which actually has been holding up slightly better than many economists has expected. Does that bode well for NatWest?
Yes, NatWest really seems to be sitting in a bit of a sweet spot at the moment. The economy is doing a bit too well from the Bank of England's point of view, at least, so they're not done raising rates yet. And this, of course, helps NatWest's profit margin. And another key metric to watch on Friday are loan loss provisions. Analysts expect £250 million in provisions for the first quarter. And if they are lower than feared, then this could give NatWest shares a boost on Friday.
Okay, so looking at those loan loss provisions for NatWest, which benefits potentially from a slightly stronger UK economy than many had expected. Leo, thank you very much indeed, with a look ahead as well to Barclays and Deutsche Bank. Bloomberg's Leo Kunscherper there with that preview. Now, Philips says it will put aside $630 million in the US to compensate patients as part of a recall of millions of devices to treat sleep apnea. CEO Roy Jacobs says he expects the final settlement to come in the first quarter next year. We spoke to him earlier this morning.
We have the remediation, as you call out, so we are at 95% now of the remediated devices. And in the settlement cases, we are now taking a first step in actually, for the economic loss, making a provision, because we expect to come to a settlement that we can announce when we have the final details closed around that.
What is your timeline when it comes to these compensations for patients?
So we're now working through getting the final conclusion of the settlement, and that would mean that we expect that from probably the first quarter next year, there would be any payouts coming once we reach a settlement.
How far away would you say we are from complete normalization to getting back to the way things were before COVID started to upset some of these supply chain issues?
I think that's a big claim because, to be honest, I think it will not be easy to get to that full stability that we had before COVID, given just the current geopolitical circumstances. But we are making great strides, and that you also saw coming back in the quarter results, because we are working on our own program where we are de-risking the high-risk components, and that actually allowed us to really convert faster in the quarter. We see also continuing strength of the supply chain in the year. So we see that strength continuing. We also see that actually the market is improving, but we don't see that this will return to full stability yet. Because, for example, as you know, in the chip industry, we still have certain electronic components that are short. And also, if you look to the specific requirement for healthcare, there are specific requirements that are just not yet fully unconstrained in the market. But it will get better quarter over quarter.
It will get better quarter over quarter. What about China's demand, Roy? China coming back, less restrictions. Has that flowed through to you yet? Are you seeing the first signs that demand there is robust once again?
Yeah, China actually is a strong contributor to our first quarter results. And also, if you look towards the year where we have actually strong confidence that this will be a good year, China is part of that reason. We see the healthcare demand is already coming back at full strength. There was actually pent-up demand given that COVID really depressed what they could do within the country. And we see therefore that in the first quarter we had double-digit contribution from China, and we expect China to be very strong.
Well, that was the Philips Chief Executive Officer, Roy Jacobs, speaking to us a bit earlier, speaking to our Danny Berger. Coming up, the Chinese embassy has removed the record of comments made by its ambassador in France on the sovereignty of some Baltic states. We'll have the latest developments next, and this is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, you know, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, probably I try and play that role.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back to the Open. We are 39 minutes into the European trading day, flat across these European markets. Currently, futures in the US running low by 0.4%. Bottom of the list across your sectors here, autos down 0.8%. Top of the list, healthcare up 0.5. Currently, euro dollar trading at 1.09. Let's get to the geopolitics of the moment, and this really is the geopolitical story of the day. The Chinese embassy in France has actually removed now a transcript of a TV interview with ambassador, that is the Chinese ambassador to France, Liu Xiaoye. Liu said that some Baltic countries do not have effective sovereign status under international law. He spoke on French TV network LCI.
They don't have, how do you say, effective status in international rights, because there's no international agreements to realize their status as a sovereign nation.
All right, let's get to Bloomberg's Maria Tadeo then. Maria, what does the transcript removal signal here? Is this Beijing backtracking?
Well, Tom, he may be in trouble this morning. Obviously, this has created a diplomatic firestorm over the weekend. You pointed out to this interview on the Friday. He was asked about a number of things. In fact, the conversation starts with Crimea. He was asked very simply, does it belong to Ukraine? And then went on to say, it depends on the perspective. The history is complicated. And then obviously got further into trouble when he suggested fundamentally the issues that the former Soviet republics do not have an effective status under international law. Now, this has created a ton of reaction from those former Soviet republics. You could look at the Baltics, Estonia, Latvia, Lithuania, some of them suggesting that this is repetition of Russian propaganda, but it would also mark a significant change in policy from China if that was to be a Chinese policy. I think the real distinction now is whether the Chinese are portraying this as just an individual comment and not related to the CCP. It'll be interesting to see what happens to Mr. Liu in that job, because Le Monde, the French newspaper, is also reporting that he has been summoned to the French Foreign Ministry today to provide explanations about these remarks.
Yeah, I bet he has. So, Maria, there are two questions, right? As you rightly say, what does this mean for China? But also, how damaging is this for Emmanuel Macron? He went to China, and actually he made a point of being really friendly with them. What does that do to EU-China relations?
Yes, and remember, Francine, Emmanuel Macron, alongside the top European diplomat too, Mr. Borrell, have been one of the voices suggesting that China and Russia, well, they have real clout in between, and therefore maybe they can talk and get to a position of mediation where China could force Russia to de-escalate things in Ukraine. The criticism has been that there is no proof of that, and this is just wishful thinking. On the flip side, however, for the European Union, this is, well, not just controversial, but also also very sensitive because some of these countries are now full-fledged members of the EU and NATO. There were some very tough remarks today from the Lithuanian foreign minister, saying that China once again proves that it cannot be a mediator in it, that it has or is rewriting history, that this is false, that they should retract this remarks immediately, but also suggesting when it comes to diplomacy, shows or proves once again that it has taken a side, and that is Russia's side.
Thank you so much, our Maria Tadeo there in Brussels. Now let's get straight to the Bloomberg First Word News with Samuel Etienne. Hi, Sam.
Hi, Francine. Prime Minister Rishi Sunak is to hold talks with 200 high-profile UK business leaders today. That's an event that comes as Sunak's government seeks to fill the void left by the implosion of leading business lobby group, the Confederation of British Industry. Dozens of major companies quit the CBI last week following recent allegations of sexual misconduct against its staff. And NBC Universal CEO Jeff Shell is leaving his role after admitting to, quote, an inappropriate relationship with an employee. Comcast said it mutually agreed with Shell that he will depart with immediate effect. Shell, who is married, has served as CEO of NBC Universal since January 2020 and worked at its parent company Comcast for almost 2 decades. The firm has not yet named an immediate successor. And Prime Minister Fumio Kishida's ruling party has narrowly secured wins in 4 of 5 Japanese by-elections held over the weekend. The PM's Liberal Democratic Party kept the 3 seats it previously held and also picked up a 4th. The victories will add to speculation that Kishida may call a national election after hosting the G7 summit in May. And latest polling says Americans are souring on the prospect of an election rematch between President Biden and former President Donald Trump. Most of those surveyed in the poll for NBC News said that Biden should not seek re-election, while 60% were also against Trump taking part. Biden is said to be planning an announcement as early as this week that he'll run for a second term. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne, and this is Bloomberg.
Sam Etienne here in London. Thank you. Now, US House Speaker Kevin McCarthy says the House will pass his $1.5 trillion debt ceiling plan this week, putting off the chance of a debt default until next year. Sources, though, tell us McCarthy hasn't yet lined up enough votes. So what's going on? For more, let's cross over to Bloomberg senior editor Bill Ferries. Bill, what does McCarthy's bill actually entail?
Well, under the plan the speaker's put forward, the U.S. would get an additional $1.5 trillion ceiling on its debt issuance in exchange for about $4.5 trillion in cuts over the next 10 years. Like you said, it's not clear that the speaker has the votes for this. He has a very slim majority in the House. It's a very turbulent majority. It's hard to keep everyone in line. There are members of the House in his own party who have never voted in their entire careers to support an increase in the debt limit, whether the president was Republican or Democrat. So he needs to try to bring in a few of those people and minimize any other defections if this plan is going to go forward, as he said it will in a vote later this week.
So, Bill, can he really push the bill? Would he have enough votes? I think he was asked that question, but didn't really give that many assurances.
Well, he can only afford to lose 4 Republicans on this vote, so it's going to be very, very tight. He's not going to get any Democrats, or very unlikely to get any Democrats. So 4-vote majority is going to be very difficult. I think if it's coming down to vote time and he doesn't feel like he has them, he will pull his proposal from the floor. But that in turn is going to have its own political costs. It could leave the Senate, Republicans in the Senate, left negotiating with the White House over some sort of increase in the debt ceiling. That would leave McCarthy and the Republican majority in the House out of the picture and would obviously roil Republican politics.
Well, Bill, on that point, is the Biden administration ready to start negotiating?
Not at all. Typically, with all of these debt ceiling issues, when they come up, there's a lot of jockeying back and forth in the weeks and months prior. This will likely come down to, the last week or so at the most. It will be right up to the deadline, and then it's anyone's guess how it will really play out. But the White House has said it doesn't want to negotiate with budget cuts. It wants a clean debt bill, debt ceiling increase. that can get the U.S. past this problem without any negotiating on the Democrat side.
Bill, thank you so much. Bill Ferry's there on the very latest. On the debt ceiling, coming up, the U.S. and the UK have airlifted their diplomats to safety as countries ramp up efforts to evacuate their staff from Sudan. We'll get the very latest next. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. A bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions. Friday, the Bank of Japan holds its first monetary policy meeting under new leadership. Will they put the brakes on the recent stimulus boom, or is it full steam ahead with the BOJ's yield curve control? Bloomberg TV has full coverage of the meeting and analysis of what it means for the market.
Our BOJ team in Tokyo has learned the latest findings of what we can expect.
Policy normalization has to start at some point.
I would like to do my best to reach the target within 5 years.
It all happens April 28th on Bloomberg.
Welcome back to the Open, everyone. 51 minutes into the trading day, and you can see across the board we're seeing a little bit of pressure. Actually, a lot of these equities are moving sideways. So European stocks sideways. Again, traders did trim risk in the lead up to a lot of economic data this week that may help us understand better the path forward for interest rate rises. It's also a busy week, of course, for earnings. So let's take a look at some of the key things that markets are watching out for. Embattled regional bank First Republic is set to report earnings after the bell in the U.S. today. We'll also get German IFO business index data later this morning. Tomorrow, the earnings real estate flooding in. Well, the earnings really start flooding in with Microsoft and Swiss lender UBS set to report on Wednesday. The headline earnings include Meta and UK-based bank Standard Chartered on Thursday, U.S. GDP data, more earnings coming from Amazon. To round out the week, on Friday, we're due to get CPI and GDP data from across Europe, including France, Germany, and Spain. The Bank of Japan will also deliver the first rate decision under the governor, Kazuo Ueda. Now let's get straight to the Bloomberg Business Flash. Here's Samuel Etienne. Hi, Sam.
Thanks, Francine. China has approved more new coal power plants in the first 3 months of this year than in all of 2021. According to research by Greenpeace, provincial governments gave the green light to more than 20 gigawatts of new coal capacity in the first quarter. That's as Beijing continues a rapid expansion of fossil fuel generation in an effort to guarantee reliable electricity supplies. And NBC Universal CEO Jeff Shell is leaving the role after admitting to a, quote, inappropriate relationship with an employee. Comcast said it mutually agreed with Shell that he will depart with immediate effect. Shell, who is married, has served as CEO of NBC Universal since January 2020 and worked at its parent company Comcast for almost 2 decades. The firm has not named an immediate successor. And US retailer Bed Bath & Beyond will close all of its stores and liquidate inventory over the next 2 months after its turnaround failed. It filed for Chapter 11 bankruptcy over the weekend, but says it's also searching for a buyer for all or some of its assets. The filing will allow it to begin liquidating its 480 branches immediately. That's your Bloomberg Business Flash, Tom.
Samatin here in London, thank you. Now, several nations have ramped up efforts to evacuate consular workers and expats from war-torn Sudan. Let's get the latest then from Bloomberg's Jennifer Zabasaja. Jen, who joins us in the studio here in London. The ceasefire announcement over the weekend didn't seem to hold then.
Yeah, I mean, a lot of reports are suggesting that it didn't really hold at all, even though both sides, both of the warring sides that we're hearing from, were accusing the other of not holding up the ceasefire. But at this point in time, Tom, really the focus is on these evacuations. We've been hearing from a number of countries that are suggesting and saying that they're just trying to get a lot of their personnel out, as you mentioned. But that, though, is causing a lot of concern amongst people on the ground, in particular the thousands, the millions of people who are still there, potentially in the middle of this fighting. At this point in time, what we're hearing, about 90% of hospitals are not actually operational. The airport, though, is somewhat operational, but access to basic necessities are just running low. And so there's a lot of concern that this is going to spill over and become even more of a humanitarian crisis than it already is.
So, Jen, where are we in terms of conflicts? What are the, can it actually escalate into something much wider?
The biggest concern is how this affects the countries neighboring Sudan. I mean, especially when you think about strategically how important it is for the Middle East and for North Africa. There's a number of countries that are on the border of Sudan. And so the concern is that this could potentially spill over, but not just that. This could potentially become even more of a concern and a power play with other regional powers who have their own, interests within Sudan. And we know that this is even more of a concern because we're just a few months away from what was supposed to be a democratic election for this country. And so a number of people are concerned about what this could potentially do in a humanitarian aspect and also regionally for the
And Jen, you kind of touched on this, and the complexities of the geopolitical play unfolding here in Sudan are quite pronounced. You have the players like Saudis, the Iranians, the Russians as well, arguably a Chinese influence. To what extent is this a geopolitical story above and beyond what is happening, and it's very distressing, within the country of Sudan itself?
I think, Tom, it is exactly what it is that you're saying. And it's not just that. I mean, you mentioned China, you mentioned the UAE, the Saudis. There's also Russia potentially at play here. And so the concern is that, all of this potentially becomes a proxy war, right? It could spill out into something even greater than what these two leaders, both of the army and the RSF, are actually fighting for, which is the future of the country. We know that Sudan, as I mentioned, is strategically placed on the Red Sea, has a number of mineral resources, including gold. And so there's a lot of interests at stake here in particular, and a lot of interest in particular for the future of democracy on the continent. Of course, it's had a number of issues in the past few years. And so there's a lot of eyes watching what's going to happen in Sudan and what this means for the rest of the region.
Okay. Jen, really appreciate you giving us the latest and the update on the situation on the ground in Sudan, of course. Jennifer Zabasaja there. Let's check in, Marcus, before we let you go. You're flat here in Europe. Futures pointing lower in the US. S&P evenings down 0.4%. Yields coming off across the Treasury curve, down 3 basis points at the front end, 414. That is it for the European market open. Surveillance Early Edition is up next. This is Bloomberg.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Credit Suisse sees clients pull over 61 billion francs from the bank in its first earnings since the UBS takeover deal were live in Zurich. European stocks and futures fall before data this week that may illuminate the path forward for interest rates, or it may not. Treasury yields tick lower. Plus, the Chinese embassy in France pulls a transcript of an interview in which the ambassador questioned the independence of the former Soviet states, remarks that unleashed diplomatic fury across Europe. So first, let's check in on the state of the markets. We're also getting some EFO figures. Business confidence index rising 93.6. It's a bit better than expected because we were expecting a 93.4 figure. Now, European stocks are wavering a little bit. Again, a lot of the focus this week will be on earnings. We have a lot of the big tech earnings in the U.S. That will filter through sentiment here in Europe. And then, of course, we have GDP out of the U.S. We have a lot of data that could give us an indication or not about what not only the Fed, but other central banks do next. European stocks for the moment pretty much flat. Basic resources amongst the industry groups that are losing the most. S&P futures also a bit lower, down 0.3%. But then when you look at the quality of the earnings, they haven't been bad at all. Out of the S&P 500, I think about 20% have reported earnings, and 40% of those better than expected. The U.S. 10-year yield, actually the U.S. 2-year at 4.14, and then iron ore futures down 4%, and that's really dragging basic resources and energy stocks down. If you look at the FTSE, down 0.1%. We'll have also a full roundup of some of the political concerns here after Dominic Raab resigned, and a lot of questions also about the CBI, the biggest lobby group here in the UK. The FTSE may be in Italy 0.6% lower. Now, banks, of course, in full swing. Credit Suisse reported first quarter outflows of more than 60 billion Swiss francs. The figure underscores a challenge for UBS in retaining key clients and assets after the emergency takeover of its biggest rival. Now, let's head to Zurich with our colleague, Manus Kranis, who's outside Credit Suisse headquarters in Zurich this morning. Manus, good morning. So what have we learned about these numbers?
Francine. Well, what you have behind me is the potential for flow from here to here. That is the issue. From Credit Suisse, you've seen 47 billion flow out of wealth management. More losses will come. It's not as brutal as everybody thought. The total outflows from assets was 61 billion Swiss francs. Some people had penciled in 100 billion. So the drive-by has not been as brutal as many people had anticipated. But 9% of the wealth management assets have disappeared. Now, Francine, it's important that we disaggregate between deposit flows that have gone out at the touch of a button and assets, real, I suppose, sticky assets. And to that extent, 57% of these outflows, these asset outflows, have been in the forms of deposits. Liquidity, they still needed a liquidity drawdown from the SNB. And there has been a significant write-down in the value of Credit Suisse wealth management overall. This is far from done. And as we've been discussing here in Praterplatz, the fog of war for client assets is far from over.
Yeah, I can hear the noise, Manus. As we all know, we're very familiar with it, of the little machine actually cleaning the streets. UBS will probably have to do a lot of cleaning up also of Credit Suisse. Would they look at the numbers and the outflows and worry about those?
We haven't quite hit that sort of peak worry point. I think to contextualize for you, if 61 billion is the actual number for this month, sort of in that vortex of risk that you and I covered, Citi's great concern is that it could have been 100 billion, and in the case of a much more progressive dissipation from Credit Suisse, you then have a risk on the asset generating fees. I don't think it's at a tipping point, but certainly it's one of the prime issues. It's almost like the Ballon d'Or, putting these two brands together in terms of the assets, the fee generating assets. This institution paid 3.3 billion. UBS paid 3.3 billion to get their hands on 1.2 to 1.3 trillion of Swiss francs over here. So we're not at that worrying point, but of course the job now by Iqbal Khan, Sergio Monti, Colin Kelleher and the team at UBS is to convince those asset owners over here in the family offices to stay the course, look for a new long-term incentive program, stay with us. This is about retention of human capital and retention of assets under management. There's a chill wind blowing up and down Praterplatz at the moment. Let's see what the impact finally is. Francine.
Let's see. Manus, great reporting, of course, as ever on the ground. Manus Cranny in Zurich. And then tomorrow, Manus will be putting all the important questions to the UBS Chief Executive Officer, Sergio Monti. I'm really looking forward to that interview. He'll sit down for an interview in Zurich shortly after the bank reports, 7 a.m. UK time, 2 p.m. in Hong Kong. Now, the Fed's blackout period also begins this week, but hedge funds have already made their final verdict. Sticky inflation is still a problem. Leveraged investors have boosted their net short positions in 10-year Treasury futures to a record high. Now, that's according to data from CFTC, which show an increase for 5 straight weeks. Well, joining us now is Laura Cooper, Senior Investment Strategist at BlackRock. Laura, as always, thank you so much for joining us. Inflation, headline coming down, but actually there's sticky inflation. It's going to be much harder to deal with that.
And that's really been the key story, whether we look at the US, whether we look at the UK, whether we look at Europe, the fact that that core inflation, ex services, continues to be sticky, as you mentioned. And really, it's the key question is how that's going to influence policymakers. In the US, I would suspect that they're probably going to be a little more tilted to one more 25 basis point hike and then pause. Whereas if we look in Europe and the UK, it's really that persistence of sticky inflation that I think is going to be more problematic and probably tilt to further risk, notably coming from the ECB. But as you mentioned in the positioning on the short positions, we do actually suspect that a lot of those rate cuts that are priced in the back half of the year for the Fed are likely have scope to be priced out. And so that's probably going to provide a little bit more of the rates movements in the future.
So where do you want to be invested in this kind of environment?
Well, I think in this environment, if we look at the rate space, it's really still around that short duration, front to the belly end of the curve, whether we look at sovereigns or whether we look at investment grade. We really think that taking that exposure and spreads is really quite an attractive carry opportunity at this point. In the equity space, it's a little bit tricky. We think that earnings estimates for the back half of the year in the US remain too optimistic. We do still see a mild recession ahead. So we are really more selective in our equity positions. And crucially, earnings, I think, will provide some color about the guidance going forward, and that could tilt our positioning in some way.
So I'm a little bit baffled at earnings because so far they're better than expected. So you have a lot of economists, you have the markets worrying also about the unintended consequences of this sudden rise in interest rates in a fast short of time, but actually earnings seem fine.
Well, I think if we take into the kind of the bigger picture context, the fact that revisions have come down so materially over the past 6 months in the U.S., perhaps the beat rate that we are seeing early in this season is not that surprising. But I think going forward, the fact that earnings estimates are expecting a re-acceleration in the second half of the year, at the same time that's likely when we're going to see that U.S. economic deteriorate to such an extent that we are going to see more of those recession fears potentially play out. So those earnings estimates have to be revised. And especially when we look at the kind of the key engine of the U.S. economy, the U.S. consumer, they've largely depleted those savings. That's been the ballast of support. We expect that by mid this year, that's no longer going to be the case. So we are watching the consumer spending quite closely.
Is there anything else that you're watching? I mean, there's so many things out there that are really difficult to model. There's like geopolitics, fragmentation. I don't know whether you have a favorite indicator to look at. I mean, this week I feel it's going to be very busy to try and, make up our minds what happens next.
Well, actually, it's been interesting if we look at, when you talk about indicators, what we're seeing in terms of flows and sentiment, because that's a good gauge for how investors are positioning. And interestingly, we are seeing more of a risk-on turn come through, notably if we look at ETF flows, for example. So in March, we started to see renewed buying in local currency EM debt, some European high yield, and that actually underpins one of our favorite views at this point, which is really that local currency EM debt, because it is quite an attractive carry opportunity. Okay, yes, this is an environment where the U.S. could go into recession. That's our base case. But we think you're being accurately rewarded for taking that risk profile, notably because, as we saw in the China GDP print last week, China reopening continues to be robust, and we do think that's going to be that key pillar of support for the broader EM space.
So, Laura, EM, local currency, is it regionally, so neighboring countries, also China, that could benefit from some of the changes there, or you go to a completely different region?
No, we do like broad exposures with the EM, but I mean, if we were to tilt a preference, it would tilt more towards the LATAM space. So whether Mexico, Brazil, largely because if we look at where the rate tightening cycles are there, you are getting quite an attractive yield pickup. So that's probably where our preference lies. But even then, we do still like kind of the broader EM space, largely because even China, for example, having exposure there, yes, geopolitical risks remain a key concern over the medium term, but in the near term, we do think there is still this tactical opportunity potentially to play out in the equity space.
We also had ETH a little bit better than expected. I mean, nothing huge, but a bit better than expected. How do you play Europe?
I think Europe is quite an interesting story in the sense that we've seen this outperformance of European equities relative to the U.S. for an extended period of time. I believe it's the longest period of outperformance in over a decade. And the key question is that sustainable? We are seeing that PMI prints and services suggest that this is an economy that is recovering from the pandemic restrictions still ongoing. But if we struggle to see that decoupling from the services and the manufacturing as persisting, so we do think the services sector is going to come under pressure. So perhaps some of the sentiment in Europe is unwarranted, the upbeat sentiment. Notably, if we think about the ECB, we had Isabel Schnabel last week come out with a very cautious tone around the inflation outlook, ECB's Lane as well, really signaling that there are some concerns still in Europe. Key will be the bank lending survey, which is forthcoming, and whether that we are seeing more of that tightening in financial conditions from the banking stress. But I think at this point, there's a lot of uncertainty to really take broad outright exposure in European equities.
Laura, thank you so much, as always. Laura Cooper, there, Senior Investment Strategist at BlackRock. Now, coming up, Baltic backlash. Latvia, Lithuania, and Estonia are infuriated by comments made by a Chinese envoy to France. We'll discuss the latest on the diplomatic row in Europe next. This is Bloomberg.
don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, Their product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but XPeng is XPeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. Welcome back. Now, the focus is definitely on some of the earnings out there. Philips gaining as they had some pretty strong earnings, and that outweighs some of the settlement cost. Now, the share is rising some 13.8%. I think we have the share price. If we do, we'll show you what it's doing right now. Gaining the most in about 2 decades. Now, Philips surged as stronger than expected earnings outweighed the 575 million euro cost of planned legal settlement related to the company's sleep apnea devices. So we'll have plenty more, of course, on Philips shortly. Now, overall sentiment for markets, it'd be great if we showed you some of the indices out there, but actually, European markets a little bit unchanged. They have been declining as traders trim back some of the risk levels before a lot of economic data this week that may help us understand actually the path forward for interest rates. So for the moment, they're either flat or on the down foot a little bit, and then we look at leveraged investors boosting their net short positions on 10-year Treasury futures to a record 1.2 million contracts as of April 18th. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Several nations have ramped up efforts in Sudan to evacuate consular workers and expats from the war-torn country. The UK and US have airlifted their diplomats to safety, while other nations have started to gain access to Khartoum's airport. The World Health Organization says more than 420 people have now died amid intense fighting between Sudan's army and a rival militia. Now, Speaker Kevin McCarthy says the House will pass his plan to increase the U.S. debt ceiling this week. McCarthy's proposal would stave off a debt default for about a year and trim the $4.5 trillion in spending over the next decade. Sources tell us the U.S. House Speaker hasn't yet lined up enough votes, but the effort is making progress. Prime Minister Fumio Kishida's ruling party has narrowly secured wins in 4 or 5 Japanese by-elections held over the weekend. The PM's Liberal Democratic Party kept the 3 seats it previously held and also picked up a 4th. The victories will add to speculation Kishida may call a national election after hosting the G7 summit, which is happening in May. Latest polling says Americans are souring on the prospect of an election rematch between President Biden and the former President Donald Trump. Most of those surveys in the poll for NBC News said that Biden should not seek re-election, while 60% were against Trump taking part. Biden is said to be planning an announcement as early as this week that he'll run for a second term. Global news powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Coming up, Germany's business outlook unexpectedly improves. We'll dig into what's driving the rise in optimism next. This is Bloomberg.
CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500. People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
While I like home runs and grand slams in baseball, at A-Rod Corp here, we shoot for singles and doubles, and we definitely never want to strike out.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep Great World Cup. This is a 3.
As the economic picture does.
Is it the OK is getting ready to make a decision? Now, Germany's business outlook unexpectedly improved for 6 months as the economy gradually recovers from Europe's energy shock. Economists had forecast an expectations gauge by the IFO Institute to show a small drop. Joining us now is Clemens Fuest. He's president of the IFO Institute. Clemens, thank you so much for joining us. When you look at the IFO numbers and the outlook for the German economy, inflation, headline could come down, but actually there's a sticky inflation. How much do you worry about that going forward?
I think there are reasons to worry about inflation. Yes, headline numbers are coming down, but what we see is that core inflation is rising in Germany and in the Eurozone. That reflects that the inflation pressure is getting broader. It's going away from energy prices. Energy prices are coming down, but other prices are rising, and we now see wage settlements reacting. So I think overall, yes, it is true that there is hope that inflation will fall, but it may fall very slowly, more slowly than many people hope.
The banking crisis certainly shook a lot of people up in March. Do you worry that there'll be a longer-standing legacy of these banking readjustments?
I think what we've seen in the last 2 weeks suggests that maybe the banking crisis is over, at least in Europe. I think in the US the situation is more tricky. But in Europe, it seems like Credit Suisse was a particular case, and there were worries about some other banks, but this seems to have calmed down. It's certainly true that the ECB monetary policy will have an eye on the financial sector and the fundamental problem that interest rates are rising very quickly and putting pressure on the financial sector. This fundamental problem hasn't gone away, but I think at least in the short term, these worries have gone away. So I think we're out of the woods there for the moment.
Mr. Fuest, overall, do you worry, or I don't know what you worry about the most, that now we think we're over the worst in terms of energy crisis and that things get suddenly worse because of an escalation of the war in Ukraine, or is there something that we're underestimating? We saw, for example, today the tensions because of a Chinese diplomat and what that put into question.
I think there is this looming conflict with China. Of course, the Ukraine war, we don't know how that is going, and there is this looming conflict with China. The Chinese economy is recovering, so in the short term, this is a positive force, but in the medium term, The relations to China are unclear, and that's one issue for worries. Also, energy supply in the next winter is an open question. For the moment, we see low gas prices and improvement, but in the coming winter, we may return to higher prices, and we may have supply problems. So this energy crisis, there is a pause in this crisis, but the crisis is certainly not over. And then there is, of course, the issue of inflation and monetary policy. How will this strong increase in interest rates affect the European economy and the world economy? It currently looks like we might manage a soft landing, but that is far from clear. We see some sectors where we have a stronger impact, like construction, which is going very bad in Germany. So I think that's another risk, that we may end up with a strong dampening of the economy due to these very quickly rising interest rates.
So, Clemens, how are you expecting everything to pan out? Kind of, stronger trend and then question mark for September?
I think we will continue to see this economy, which is neither collapsing nor growing dynamically. So it's a stagnating economy, and the question is what could take the economy out of stagnation. I think something that could achieve that would be further improvements in supply chains and maybe perspectives for a settlement in the Ukraine war. I think a positive factor is the signal given by the Secretary of the Treasury, Yellen, more cooperation with China, warning that conflicts may go too far.
Thank you so much, Clemens Fuster, President of the IFO Institute. Coming up, the UK Prime Minister will be speaking with top business leaders today. We'll ask what that means for the business lobby. This is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
Welcome to Balance of Power. This is Bloomberg.
Credit Suisse sees clients pull over 61 billion francs from the bank in its first earnings since the UBS takeover deal. Now we're live in Zurich. European stocks and futures fall before data this week that may illuminate the path forward for interest rates. Treasury yields tick lower, plus the Chinese embassy in France pulls a transcript of an interview in which the ambassador questioned the independence of former Soviet states, remarks that unleashed diplomatic fury across Europe. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Credit Suisse reported enormous first-quarter outflows, underscoring the challenge facing UBS as it absorbs its rival. Clients pulled over 60 billion Swiss francs from Credit Suisse during the period when a loss in confidence led to the Swiss government to broker an emergency takeover. Well, let's head to Zurich now with our colleague Manus Krani, who's outside Credit Suisse headquarters in Zurich. So, Manus, what have we learned about the numbers? And good morning.
A very good morning to you, Francine. Well, if you look at UBS, the stock price up 1.5%. The market's perception is this could have been a lot worse. What we know is this: 61 billion went from here. We don't know what portion of it went from here to UBS. I've got it the right way around eventually. Credit Suisse behind me there, UBS behind me there. But the bottom line is they say that more pain will come. 9% of the assets went out the door. Now, what we know is the rich have not hung around. A great proportion of the deposits that were removed from Credit Suisse have gone out the door. The question is whether it's a slow dissipation or the beginning of a much bigger glacial move. That's the risk to the UBS Credit Suisse deal. Liquidity, we know that Credit Suisse needed liquidity and will possibly need more. We know that they took a goodwill write-down of 1.3 billion. That gives you a sense of the injury that has been afflicted on the wealth management business within Credit Suisse. The issue is, however, how much of your top talent, those individuals with the keys to the kingdom in terms of the assets of the super rich, the hyper rich, the families around the world and in Asia and here in Switzerland and Europe, to keep those assets under the house of UBS, turn the key and generate assets. That is the challenge for Iqbal Khan, Sergio Amotti and Colm Kelleher. And one of the questions we'll put to Amotti tomorrow morning when we sit down is, what's your story? What's your pitch from UBS to get these clients to stick with you, to generate the magic numbers that the market believes can be done from this transformational Swiss banking deal? Francine.
Manus, as always, great work there on the ground. Manus Krani in Zurich. Now let's also get to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. China has approved more new coal power plants in the first 3 months of this year than in all of 2021. According to research by Greenpeace, provincial governments gave the green light to more than 20 gigawatts of new coal capacity in the first quarter. That's as Beijing continues a rapid expansion of fossil fuel generation in an effort to guarantee reliable electricity supplies. Now, Speaker Kevin McCarthy says the House will pass his plan to increase the U.S. debt ceiling this week. McCarthy's proposal would stave off a debt default for about a year and trim the $4.5 trillion in spending over the next decade. Sources tell us the U.S. House Speaker hasn't yet lined up enough votes, but the effort is now making some progress. NBC's Universal CEO Jeff Shell is leaving his role after admitting to an inappropriate relationship with an employee. Comcast said it mutually agreed with Shell that he will depart with immediate effect. Shell, who is married, has served as CEO of NBC Universal since January 2020 and worked at his parent company Comcast for almost 2 decades. The firm has not named an immediate successor. That's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne Gerrans. Now, UK Prime Minister Rishi Sunak is set to speak with major firms and investors today. This is as he seeks to fill the void created by the implosion of Britain's main business lobby, the Confederation of British Industry. Now, for more on all of this, let's bring in Bloomberg's politics reporter, Emily Ashton. Emily, good morning. So what's the thinking behind the PM's plans at this point?
So yes, major talks today. It's called a Business Connect. He's got more than 200 business leaders in London. And the idea, the government says, is to unlock innovation, grow the economy. But as you say, this void has been created by the kind of implosion of this business lobby, the CBI. And that comes after the CBI suspended much of its operations. Dozens of companies have quit. And that follows allegations of rape, sexual misconduct among staff members. Now, all policy is on hold at the CBI until June. And the government's cut its ties with the CBI while that investigation continues. But relations with business have been difficult for the government since Brexit back in 2016, that referendum. Boris Johnson had a rocky relationship with business as well. And we had all that chaos in government last year, which has not helped relations as well. So Rishi Sunak's keen to get on the front foot with business again. And also on the politics side, you see Keir Starmer's Labour Party really make inroads with business in recent months. He's had lots of events kind of wooing business leaders. And I think now Rishi Sunak's government wants to get back in on that.
And Emily, this comes so soon after the resignation of the Deputy Prime Minister Dominic Raab. Has there been any fallout to that within the Conservative Party?
That's right. I mean, Dominic Raab resigned on Friday, and let's not forget he was a key ally of Rishi Sunak. He was his Deputy Prime Minister, came after a report upheld 2 allegations of bullying. And yes, there has been fallout within the Conservative Party. Some in the party, some MPs believe that Rishi Sunak should have defended Dominic Raab, should have stuck with him more than he has. Rishi Sunak said barely anything about it and let Raab kind of fall on his sword and just leave. So expect that to kind of rumble on. But there is that war ongoing between ministers and civil servants within some sections of the party, and that is going to be an ongoing headache for Rishi Sunak.
Yeah, Emily, Labour has its own problems. Veteran Labour MP Diane Abbott has been suspended.
That's right. And yesterday, Diane Abbott suspended as a Labour MP. She's obviously been a Labour MP for over 30 years, but she wrote a letter to a newspaper suggesting that Jewish people experience prejudice, but not racism like black people do. Now, she apologised, but the party HQ swiftly removed the whip from her, and now she will be sitting as an independent MP until that whip is restored, if it is. But obviously, that's a very difficult subject for Labour. Keir Starmer, the Labour leader, has tried to show he's changed the party by rooting out anti-Semitism after the Equality and Human Rights Commission had put the party in special measures over that. So very difficult topic for that. So we'll see what happens to her with the whip in future weeks.
Emily, thank you so much. Emily Ashton here in London. Now, the guest list of business executives who will be speaking to Rishi Sunak today includes a Barclays chief executive, C.S. Venkatrishnan, and we'll be speaking to him exclusively this week on Thursday, and that's after earnings. Many questions, of course, about the business model going forward, but also what the banking turmoil meant for Barclays. Now, sticking with the UK, all eyes will be on bank earnings, starting with Standard Chartered on Wednesday. For more, let's bring in Bloomberg's Markets Today editor, Christine Aquino. So, Christine, thank you for joining us. What should we be on the lookout when you look at earnings this week?
Well, Francine, for UK banks specifically, it's really going to be about those deposits, right? I mean, we've just seen Credit Suisse reporting today $69 billion of outflows. I mean, that's staggering. And of course, we know what happened in the first quarter, right? It was a tumultuous quarter, eventually led to the downfall of Credit Suisse. And so investors are very curious to see, has that whole situation really created lasting damage on the banking sector as a whole? And as we know, HSBC, for instance, involved in the rescue of SVB UK as well. And so really just looking at the health of the balance sheets of these banks and looking for signs that they've moved past that turmoil that we see in March.
Christine, when you look at gilts, what are they telling us?
Well, Francine, mixed messages from gilts today. I mean, we did definitely get good news from the S&P outlook revision, and they're now seeing it as stable instead of negative. The outlook for the UK debt market, that comes as the impact of Liz Truss's unfunded budget faded away. But, we still have that inflationary story that is very much driving gilts at the moment. We've seen that heat up bets for the Bank of England to raise interest rates, and the bank itself now needing to consider more rate hikes than probably what they wanted initially especially because inflation is just proving too stubborn in the UK.
And then pounds. I mean, pounds not doing badly at all. That's probably the understatement of the year.
Exactly. I know. It is the comeback kid of the currency world. I mean, there is still a lot of negative factors, of course, as we mentioned, the inflation story complicating things for the pound moving forward. But I think it is holding up quite well. It's looking quite resilient. You could argue those rate hikes, if they do come to fruition, would be good news for the pound in theory, because, you know, it just raises their appeal for international investors. But I think also there's a dollar story to consider here. There's definitely the feeling that the dollar is past the best parts of its rally, you know, and it is set to pull back a little bit because we're now looking at potential Fed rate cuts that markets are pricing for. That's not the base case yet, but, you know, we are seeing the Fed staff economists, for instance, projecting a mild recession out of the U.S. later this year. So that could be another weight on the or on the dollar rather, which in turn could be a boost for the pound.
There you go, Christine. Thank you so much. Bloomberg's Christine Aquino here in London. Now, we'll be covering all things UK every week on Thursdays at 9:30 a.m. London time in our half-an-hour UK special. Coming up, we speak to Mursal Hedayat, Chief Executive of AI-powered online language learning platform Chatterbox. That's coming up next, and this is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Earnings season is here.
We haven't had a shocker yet.
They are minting money.
Markets are still volatile.
I think it's going to be choppy.
Bloomberg breaks the numbers first.
First quarter results, impressive.
The revenue beat is amazing.
With exclusive expert analysis.
This is really important to watch.
Buy on the fear, sell on the news.
Where is the upside in this market?
Do we get answers to that today?
The bottom line speaks for itself, and that's what moves markets.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, a new study by Stanford University and MIT researchers show that AI tools boosted worker productivity at a Fortune 500 software firm by 14%. Now, the research found that the lowest skilled customer service workers reaped the greatest benefits when AI was rolled out. Well, joining us now is Chatterbox Chief Executive Officer Mursal Hidayat, Chief Executive of an AI-powered language learning platform that especially helps refugees. So thank you, Mursal, for joining us. Now, I feel like there's a lot of ethical debate on whether AI is a force for good or bad, but 100% in your case, you're using it for good. This is to give language skills for people that need it most.
Definitely. I mean, I think a lot of people are worried about technology and AI in particular taking over jobs. And I think we know from history that that's not always the case. At Chatterbox, we've built technology that uses AI to allow anyone to teach their native languages online. And the power of that is that we can use this technology to employ refugees, women returning to work after a career break. So the social impact is even greater.
So I guess the concern is that it's the first time, and we were in Ireland together at the New Economy Forum, is actually this is the first time when you see a big disruptor, and I keep on hearing like this is, you know, the first time where we had the car. It disrupted, of course, the horses, and a lot of people think, well, what do we do with the horses and what does it mean going forward? But AI doesn't really put the human at the center of it, or does it?
I mean, I think humans are so adaptable, and I think, if anything, if some of the more rote parts of work are taken over by technology, that can only be a good thing. I think lots of things that we do today are not fulfilling for human beings. Take language technology, language learning like we do at Chatterbox. So much of the education in teaching grammar and vocabulary is way better suited to multimedia, AI, you know, spaced repetition, not with the teacher standing in front of a chalkboard. What the teacher needs to do is to engage the learner, keep them motivated, and to help them practice and to give them a real-world practice setting. This is exactly what we do. Now, that wouldn't have been possible if technology hadn't advanced to the level that it has now.
What's the next, I guess, like for some of the things that you use? Are you looking for processors? When you look at research and development, how much better will your product be in 2 years?
Well, we started off as an AI company, and of course we welcome the revolution that's been advanced. I think the case to encourage more and more companies and people to adopt language learning and technology and AI in particular in their workflows, the case has been made almost, I think, by recent advancements. But I think where we need to go next is to be creative about what parts of the economy are truly better off delivered by human beings and which parts are better off delivered by machines, to upskill and to make sure that these opportunities are spread far and wide. I did mention at Chatterbox our recruitment program specifically hires refugees and those who are most marginalized in the labor market. These are not communities that are traditionally engaged in technology or AI. So I think that having foresight into the potential inequalities that may be reproduced, and also thinking about how we can use AI to boost the quality of work overall.
This is so difficult because I don't know whether it's a government or it's private entrepreneurship. If you look at the regulators, a lot are saying, look, they're still on the back foot because they haven't really, I mean, we haven't really figured out what AI becomes and what it morphs into. So who's the right person to look into these big questions that you're asking?
I think, I'm a believer in markets. I think that a bunch of driven people like our team at Chatterbox and other places solving small problems, genuine real-life problems for consumers, that is where the real test of this technology and where its impact will be felt. And I really believe in the organic creation of the new paradigm through the markets, but also, of course, carefully guided by policymakers, because we do know there's a dark side to AI, surveillance, biased algorithms that do need to be carefully watched. But overall, I believe in the power of human ingenuity to take this technology to make it truly impactful.
Marissa, how big are you expecting Chatterbox to be? So if you look at the next, 2 years, 4 years, 5 years, how are you expecting it to develop?
Well, EdTech has been one of the earliest adopters of AI and technology in general. So I think we're quite far ahead compared to other industries. The language learning industry is over $300 billion in size. The technology segment of it is only $5 or $6 billion. So there's a huge amount of growth. You've seen so many of our language technology companies being listed, being sold, being resold. So I think there are plenty of space for more giants like Duolingo, and I think Chatterbox will be one in the next few years.
And are you getting enough funding? And one of the things that we were also trying to explore is when you look at, 2 years ago it was all about the metaverse. Now it's all about AI. Now you started the company, or certainly you were looking at Chatterbox before this kind of, general freak out or interest in AI. But has it helped with funding?
We're extremely fortunate to have what's called a double bottom line business model. We are profit making. We have some of the most influential VC backers from the UK and Silicon Valley as our investors, but we also have some of the most influential social impact investors in our cap table. So, funding, it's always a challenge, but I wouldn't say it's been easier for Chatterbox compared to some other social impact organizations. Of course, looking at SVB, looking at recent returns and reports from some of the bigger technology companies, I think the next year is going to be difficult for us. But actually, if you're a company that has strong fundamentals like ours, I think it's a good time to be alive.
So do you need, is there something that you would need more from governments maybe? You're already having a big impact. This is about, training and hiring people that maybe the government may have not thought about. What could what could they do to make your life easier?
Absolutely. I think, being an entrepreneur, you try to predict what the problems will be in 5 or 10 years' time, not the problem that's a problem now. And, 6 years ago when I started Chatterbox, the biggest problems in the horizon were escalating global force displacement, escalating and accelerating technological displacement from work, and also the opportunities inherent in AI. These are the insights that led to the initial development of the Chatterbox technology platform. Today, I think we're uniquely positioned to help governments solve some of the early frictional and actually structural unemployment that can result, that takes extremely talented people out of work. And we're a great example of how technology can be used intelligently to solve unemployment rather than create it. So in terms of we work quite closely with the government in the UK. It would be great to partner with governments elsewhere to see how we can support more people worldwide.
Mursal, thank you so much for joining us.
Thank you for having me,
Chatterbox Chief Executive Officer Mursal Hidayat. Coming up, as we get a slew of European bank earnings this week, we'll discuss what investors will be watching out for. That's next, and this is Bloomberg.
think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking to do.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Get your Fixed Income Fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
The medium-term trend is for a very aggressive weakening in the U.S. dollar because we unwind the stagflation trade of last year.
I do think it is a time for dollar weakness. We could be seeing the Fed peaking a bit earlier than other central banks, which means there are better yields to be had for that level of safety elsewhere.
Is it that slowing down U.S. economy is necessarily going to be supported for the dollar? Or is it that because people are coming back to U.S. Treasuries, that inflow actually makes a difference?
The strong dollar had been a headwind for emerging markets. Our view is that it likely does weaken from here because the U.S., in terms of interest rate hikes, likely one and done in May.
I don't really believe that the dollar can really weaken significantly. Certainly, I think it's going to be choppy. There's going to be bouts and risk appetite appears better. But I think we're in for perhaps a rocky ride still for the rest of this year.
Some of our guests there sharing their views on the dollar. Now, that's the subject of the latest MLive pulse survey, which shows investors see the greenback sliding even further from last year's two-decade high as the market has underpriced the Fed's oncoming easing cycle. Now, more than a third of respondents actually expect the dollar index to fall by between 2 and 5%. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. Several nations have ramped up efforts in Sudan to evacuate consular workers and expats from the war-torn country. The UK and US have airlifted their diplomats to safety, while other nations have started to gain access to Khartoum's airport. The World Health Organization says more than 420 people have died amid intense fighting between Sudan's army and rival militia. Now, Speaker Kevin McCarthy says the House will pass his plan to increase the U.S. debt ceiling this week. McCarthy's proposal would stave off a debt default for about a year and trim $4.5 trillion in spending over the next decade. Sources tell us the U.S. House Speaker hasn't yet lined up enough votes, but the effort is making progress. Prime Minister Fumio Kishida's ruling party has narrowly secured wins in 4 of 5 Japanese by-elections held over the weekend. The PM's Liberal Democratic Party kept the 3 seats it previously held and also picked up a 4th. The victories will add to speculation Kishida may call a national election after hosting the G7 summit, which is happening in May. Global news powered by more than 2,700 journalists. Francine.
Leanne, thank you so much. More Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller and Anna Edwards. This is Bloomberg.
Somebody says, I want to be, and a person has an impact on society, what would you recommend that somebody do to train themselves and to work their way up to be somebody that's impactful on society?
Well, I think the first thing you've got to believe in something that you really care about. You know, I've been fortunate that over the course of my career, I've come up with things that have mattered to me, and I've pursued them. You know, the best advice I ever got was from Mike Bloomberg. And he said to me at one point, he said, show me somebody who's never lost, and I'll show you a loser. And I believe that that if you believe in something, go after it, take risk. Obviously, they should be smart risks, but they should be around things that you really care about.
So you would see your legacy as being actually target ALS and helping to moderate the impact of ALS, if not curing it.
That's my final legacy. I'm proud of some of the other stuff that I've done as well. Transformation of New York after 9/11. I'm also incredibly proud of a lot of the companies we created at Sidewalk, but I feel like I've done a lot.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
We're going through reporting season at the moment, and I think that's probably going to be key, isn't it? The outlook from companies, the types of the sort of earnings numbers that they come up with, and their outlooks going forward.
Growth continues to slow, and that continues to pressure profits and put us further into this earnings recession that we've already been in.
There's just a lot of great news priced into great companies right now. If you feel safe owning it, it's probably expensive.
This is ultimately really going to be, I think, a defining earnings season for winners and losers.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. UBS has its work cut out for it. Credit Suisse saw $69 billion of outflows in a frantic first quarter and took a large write-down at its wealth management unit. Big week for earnings. We will hear from the tech giants Amazon, Meta, and Microsoft, plus regional banks such as First Republic. And hedge funds appear confident the U.S. can avoid a recession. They've placed their biggest ever short on 10-year Treasury futures. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And Matt, perhaps today, one of the quieter days, for now at least, as we get ready for what could be a really busy week on the earnings front and also on the macro.
Yeah, I mean, I was expecting us to break out of this tight trading range on Friday after the options expiry, but a whole lot of nothing ended up happening in the cash trade. We closed at 41.33, I think like 0.1% higher on the S&P 500. We do see futures down a bit today, about 0.4% for now. So maybe we move out of this range as we start to get more and more earnings, deeper into reporting season. You see the 10-year yield coming down. I think this is a really interesting story on hedge funds being very short, especially the leverage funds being very short treasuries. Right now, it looks like investors are buying treasuries, and that's pushing the yield down about 3.5 basis points to 35.53, I should say, which really isn't much different from the range that we saw last week. It's pretty much exactly where it was on Friday at this time. NYMEX crude also not moving at all. Since it moved down into this range, it's been stuck there. So we'll see what happens at 77, 76 if OPEC plus countries start to actually cut production. Remember, we got those surprise cut announcements, I think now 3 weeks ago on a Sunday, and it didn't do anything really to boost the price. Bitcoin is down again today, $290 to 27,221. So it looks like investors continue to take profits after we breach the 30,000 level to the upside. In terms of what's going on in Asia, a little bit of a mixed picture, but also not huge moves. The broader MSCI Asia Pacific Index index is down 0.2%. You had gains in Japan slightly at the close. The Nikkei was up 0.1%. The Hang Seng was down 0.6%. And you do see a little bit of U.S. dollar strength. This is interesting because a lot of people are looking at major currency pairs and expecting the dollar to weaken. But right now we see dollar strength again against the yen. You can buy more than 134 yen for a U.S. dollar. Anna, what do you see in Europe?
Yeah, we see weakness in Europe, and on FX, we'll get a lot more analysis on the FX market later in the program, won't we, Matt? But this is the European picture right now. Quite a lot of divergence, actually. The Italian market really underperforms, down by just over 1%. Elsewhere, we see much more modest losses coming through, and in fact, some of these markets not going very far this morning. The FTSE, the CAC 40, and the DAX all down by around 0.2%. If we have a look at where we see movement, financial services is, of course, an area of focus for us this week. We get lots of earnings out from Europe, and we started with Credit Suisse earnings, but let's face it, we know how much Credit Suisse is worth right now because they're being bought by UBS. So I put the UBS share price in here on the back of those Credit Suisse outflows, and we'll get some further analysis from Zurich on that subject in a moment. But the UBS share price up by 1.9%. Philips is really in focus. This is the Dutch healthcare business, up by 11%. There were the earnings and also a focus on cost reduction, and that seemed to really delight the market, despite the fact that they had to make a big legal cost, take a hit on the legal cost, I should say, because of the controversy and difficulties, the legal challenges they face around their sleep apnea products. But as a result, the stock is net very positive. The euro in focus at 110, just over that 110 level. It's a busy week for macro. We'll get inflation data out towards the end of the week from lots of European countries, so that'll be a focus for us. Also, we'll keep an eye on the euro yen with the BOJ meeting later on this week, and the pound also in focus. As we're going to talk FX later in the program, I thought I'd put in some FX. And we had, after the close on Friday, an upgrade to the outlook from the S&P on the UK economy. They took that from negative to stable, so that on the back of a lot of people rethinking their assessments about whether we go into a recession, or if so, how deep here in the UK. So the pound up a touch on the back of that story.
Sleep apnea products. What, that's like the mask that with the tubes? Is that what you're talking about?
I have to say, I'm not entirely sure what they look like, but they led to some legal challenges.
All right, well, it's lucky that you don't know because it looks very uncomfortable. Let's get to the banking story in Zurich right now. Credit Suisse reporting $69 billion of outflows in the first quarter. The figure underscores the challenge for UBS in retaining key clients and assets after the forced takeover by its bigger rival. Manus Cranny joins us now from Zurich. So Manus, what have we learned about these numbers?
We've learned that it's a brutal flesh wound in terms of the exodus of funds, assets under management from this brand, Credit Suisse. The question is, how much did this brand, UBS, garner from those outflows? A question that we will discover more tomorrow morning. But it is a brutal flesh wound. But what it could have been an awful lot worse. A lot of people out there are saying it could have been 100 billion Swiss francs that left the front doors of Credit Suisse. They have said things are going to get worse. We're going to lose money, substantial amounts of money. Credit Suisse's message to the market, this fog of war, as it were, on deposits, on confidence, is far from done. So 60 billion went out the door. And by the way, the rich don't hang around, do they? Deposits went like that. 57% of these outflows were deposits that can be done at the touch of a button. The challenge now is, how do you convince your clients to stay? Liquidity, they drew down 100 billion. Credit Suisse drew down 108 billion in liquidity from the central bank. And to understand the dissipation in terms of wealth management, they took a write-down of 1.3 billion Swiss francs. There is no declaration of victory here, but Anna, you're bang on the money. UBS's trading price is a vicarious interpretation, far more intelligent than mine, in terms of the first take on Credit Suisse's numbers and what it means for the future of the deal.
Yeah, absolutely. And what does it mean for UBS then, Manus, as Credit Suisse scrambles to try and keep the dollars and keep the people in the door? What does it mean for the business that is buying Credit Suisse?
I think Hildebrand in Dublin at the New Economy Forum summed it up beautifully, where he said Philip Hildebrand, you know, one of those core individuals of Swiss banking, we understand, was deeply involved in this, in perhaps the negotiations around this. It's about integration risk. And here's the thing. when rich clients, and I've had a few, promise you that they're going to come with you. They're going to come with you to the hallowed ground. They're going to come with you to the new institution, and then they don't. They're sticky. They stay where they are, where they have had decades of relationships. You know, the road to hell is paved with great intentions by super wealthy clients. They promise you a great deal, and then they go, you know what, it's not just so bad here. I'm getting a much better rate of interest. So I think it is about Iqbal Khan, Colin Kelleher, and Sergio Motti confirming and affirming to the anointed ones within Credit Suisse, stay with us, stay the course, stay the road. We will give you the long-term incentive program to remain with us, because they are the keys to the kingdom. Those rainmakers who look after the families of the super rich and the institutions. Convince them to stay, and this will be quite literally le ballon d'or for Motti and Kelleher. The risk is further slow dissipation of assets, fee-generating assets, is the single biggest risk in this trade.
All right, Manus, amazing reporting. As usual. Great to have you there in Zurich. Manus Cranny joining us from the capital of Swiss banking, a universe that just seems to continue to get smaller and smaller. And it's not just European bank earnings. This week brings an avalanche of earnings from a number of sectors, tech to industrials. Simone Foxman joins us now on set here in New York for more on what to expect. So what do we got lined up for this week, Simone?
Well, $16 trillion worth of earnings from companies within the S&P 500. That makes it its busiest week, at least by a market cap basis. One of the key themes we're looking at is tech. Analysts are expecting the biggest drop in profits since 2009, and we're going to see those major names report. Alphabet, Meta, Amazon, Microsoft, all coming in this week. The story I'm really watching, however, is the consumer. We saw Procter & Gamble come out late on Friday, boosting its sales expectation, but on the back of higher costs. We're also going to see Coca-Cola, McDonald's, PepsiCo, Kimberly-Clark, UPS, all of these giving some indication of how the consumer is really faring, and then we'll get, towards the end of the week, round out those earnings with some oil super majors, Chevron and Exxon.
Okay, so plenty to look out for, Simone. Bloomberg Intelligence says some 77% of the S&P 500 companies that have reported so far have beaten expectations. What do analysts more broadly make of the earnings story?
Yeah, well, that number is really a question that Mike Lowengarten at Morgan Stanley asked. Were these expectations intentionally set too low so that these executives could come out and say, hey, we actually did better than what we were projecting and where everybody thought we were? But there are a couple of reasons that analysts might have kind of gotten this wrong and had expectations that were a little bit too low. One, we're already in an earnings recession, and we really have been since the second quarter of 2022, if we define that as 2 consecutive quarters of profits being below their year earlier level. You know, the second one, and I think this is why I'm so interested in the consumer piece as well, is that some of the concerns we're seeing in the market are not based around banking stress. They're not things that we see so closely here in New York City or in London. They're really issues with the broader economy. So trucking, the amount of freight being carried in the United States, slowing down. Or Procter & Gamble, I mentioned that they boosted expectations for sales, but that's on the back mainly of some higher costs. So input prices rising. And these things are just harder to kind of put that specific figure on. And so, yes, we are seeing all this kind of wariness about the expectations for earnings, but maybe it's just harder to kind of get a grip of what that actually does to the numbers and when, of course, that's going to play out.
And also, 76% of companies beat S&P 500 earnings expectations every quarter since I was a little kid, and I'm old.
Well, I mean, it's the messaging, right? You're trying to set this up.
It's always 76, 77, 75%. It's always in that range. So nothing's changed in that sense. Simone, thanks so much. Simone Foxman there reporting on a lot of earnings to expect this quarter. EVTS on your Bloomberg terminal is the best way to find the earnings calendar. Let's get to hedge funds right now. They seem to be confident as the Fed, as confident, I should say, as the Fed, that the U.S. economy can avoid a recession despite the burden of higher interest rates. CFTC data shows investors boosted their net shorts on 10-year Treasury futures to a record 1.29 million contracts as of April 18th. Bloomberg's Valerie Teitel joins us for more. So, Valerie, what do we know about shorting Treasuries?
Look, there's two things notable about the CFTC positioning data that came out on Friday. One of them being the most net shorts on that 10-year bond on record. But the second one being is that their shorts were across the curve as well. 2-year futures, 5-year futures, 10-year futures, and 30-year futures all had net short positioning from the hedge fund community. It could suggest that we could be very ripe for a ferocious rally if yields don't continue to creep higher. But it's also prudent to ask, why possibly are they positioning short? Well, let's look at the calendar. What we have this week, we have U.S. GDP, the first advanced reading of the first quarter on Thursday, followed by the Fed's favorite measure of inflation, the PCE metric on Friday. Perhaps the hedge fund community is positioning for a very upside reading on GDP and perhaps a hot PCE number, posing a big question about this Fed pause in May, leading yields to run higher. But I want to caveat that with one thing, Matt, and we need to remember that that hedge funds use Treasury futures not just for directional plays, but also for RV trading as well. We know that vol has been declining significantly in the last 6 months. Perhaps this is just suggesting there is a build of a major RV trade in the 10-year part of the curve.
Okay, so that's some of the thing we need to keep an eye on. So that's positioning around treasuries from the hedge fund community. Valerie, what about their positioning in stocks?
Positioning in stocks, the bears continue to reload on their shorts in the S&P 500. This has been happening for quite a few weeks now. It's now the most stretched in 12 years. Again, suggests if we continue to get these earnings beats, especially from those tech names, that we could see quite a big rally as these shorts get stopped out. We have Microsoft, Amazon, Meta reporting this week. And this also comes as the S&P has seen vol declining as well. Vol has been declining across the board, leading to such a substantial buildup of these positions.
All right, Valerie, thanks very much. Bloomberg's Valerie Teitel talking to us about market positioning vis-a-vis treasuries. Right now, let's take a look at some of the stocks that we're watching in the pre-market this morning. Not a heck of a lot going on and not all massively important companies, but I thought it was interesting to throw in Bed Bath & Beyond. Someone is still betting that this won't go to zero, apparently. Fewer and fewer people after they filed for bankruptcy this weekend. Chapter 11 proceedings will start. Plans to wind down the company by the end of June, and the stock is trading in the pre-market for 18 cents a share. So I guess if you're one of the apes on Wall Street bets, now's the time to buy. In terms of Tesla, we've seen a lot of volatility in this stock due to price cuts and price increases. Bloomberg News is Sean O'Kane and Craig Trudell have a great story on the terminal about Elon Musk's bet on driverless cars. The billionaire said last week that he could drop margins on Tesla car sales to zero, but make up profits on autonomous software sales instead, which is a cool idea, but investors may not love it. This share's down a little more than 1% in the pre-market. Anna?
Okay, lots to focus on then pre-market. Coming up on the program, Maria Weitmaner joins us, senior multi-asset strategist at State Street Global Markets. What does she make of the positioning of the hedge fund community, and what does that tell us about any sort of natural bias in markets as to how we respond to earnings stories? There are certainly plenty of those. And James Lord joins us, Morgan Stanley's global head of FX and EM strategy. We'll get his take on the dollar. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping. Look, people have conviction, or they invest for the. If they invest for the right reasons, just keep at it.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
While I like home runs and grand slams in baseball, at A-Rod Corp here, we shoot for singles and doubles, and we definitely never want to strike out.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York. Anna Edwards with us out of London. Now, a lot of people have been complaining about the VIX. It's broken. It doesn't work anymore. My buddy Anthony at Cabrera Capital always tells me, well, lately has been telling me, he uses 0 days to expiry options instead, and a lot of other people do. So now we have kind of a new VIX coming out today. VIX 1D index is the index. I'm waiting for it to really kick in. But I have a chart here that just shows you the dominance of 0 days to expiry options. This is in terms of total call or total put volume. They've got 18 or 12 to 13% respectively. If you look at just S&P 500 options, 0 days to expiry options make up 40% or more than 40% of that entire universe. So it's huge right now. Joining us is Simon White, Bloomberg's macro strategist, to talk about what to expect. Simon, are we going to get a real volatility index or a real gauge of sentiment of fear with this new VIX 1D index?
Well, I think it's certainly going to make things a lot more transparent. You know, amidst all the kind of excitement of the banking crisis, I think 0 day, trading kind of got a little bit forgotten about, but it's still there. I mean, you go and look at the most active traded options, almost all of them are, either 1 or 0 days to expiry. So it's a huge part of the market. And to say two things I think you've got to bear in mind. One, it increases leverage because to trade 0 day options, you don't need to post margin. And second of all, as you alluded to, the VIX basically becomes or has become a lot less representative of what's actually going on. A good analogy is, if you imagine like a pot of almost boiling water, the surface is very calm, but underneath it's very turbulent. And the turbulent part is kind of like the 0 day trading, and the surface is the VIX.
And
it's
another
not really
metaphor I know you've used, Simon, is ducks.
Yeah.
Very ferociously underneath the surface.
Always water related.
They're always water related.
Yeah.
I mean, how do we need to be worried about those ducks' feet and that volatility or perhaps instability that could be caused?
Well, I think when you take two things together, when you have a lot of, as I say, extra leverage being taken, and you have a lot of people pursuing the same sort of trading strategies, they tend to chase volatility lower. We saw that in 2018, which means that people have to take on more risk. And if you combine more leverage with more risk, it tends not to end well. Now, I'm not saying it's an immediate risk, but 100% you want to add your 1 day VIX to your kind of screen of things to watch, because it's very much a part of the risk pattern out there.
Yeah, put that in the dashboard. Okay, Simon, thanks very much. Bloomberg Simon White with the latest on volatility, where we see it, where we don't. For more market analysis, MLIV Go is the function to use on your Bloomberg terminal. That'll get you to the Markets Live blog. This is Bloomberg.
what's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Now, keeping you up to date with news from around the world, here's the first word. House Speaker Kevin McCarthy says the chamber will pass his $1.5 trillion debt ceiling increase this week. Still, Bloomberg has learned that McCarthy hasn't yet lined up all the votes he needs. He told Fox that President Biden must negotiate in order to avoid a U.S. default. Last week, the president called the Republican plan wacko. Another blow to France's President Macron and his push to enlist China to help in the war on Ukraine. China's ambassador in France told French TV that the former Soviet states don't have a sovereign status as independent nations, aren't recognized as such. Those comments triggered furious reaction, especially, obviously, in former Soviet bloc countries, Estonia, Latvia, and Lithuania. China, though, has now backtracked and says it respects the independence of those countries. And in Sudan, the international effort to evacuate diplomats and other expatriates picked up over the weekend. The U.S. and UK militaries were able to airlift their officials to safety. A temporary ceasefire between Sudan's army and the Rapid Support Forces militia, as it has battled since April 15th, appears to have failed. This is Bloomberg.
Chris, can I ask my landlord for a rent cut in the next couple months? Like, is that reasonable?
Well, I guess it depends when you signed your lease, Joe. It sounds like you got kind of one of those pandemic deals that, particularly in New York City, where rents actually fell really sharply in that first year of the pandemic. So we are really seeing the market having turned a corner a little bit over these past few months. Prices have been coming down for 4 straight months now in our national rent index. But, if you're still paying that late 2020 level, then you might not necessarily be eligible for a discount at this point.
Good point. All right, I have another question, which is like, so I have 2 kids, but unlike other people, I actually am cool, and I don't want to move to the suburbs. Like,
this episode is just Joe taking like advice on handling his rent.
I just want to point out, I really like my landlord.
You love your landlord?
She's very attentive. We have a very good relationship. So even though I started the episode saying I was anxious, if she is listening to this, I hope she hears that I really enjoy where we live, and I really enjoy our the landlord.
She should factor your consistency into her pricing algorithm.
We've never been. Yes, exactly.
Excellent.
DOJ or other authorities
could face bigger challenges next.
was going to keep rating World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. UBS has its work cut out for it. Credit Suisse saw $69 billion of outflows in a frantic first quarter and took a large write-down at its wealth management units. Big week for earnings. We will hear from tech giants Amazon, Meta and Microsoft, plus regional banks such as First Republic. And hedge funds appear confident the US can avoid a recession. They've placed their biggest ever short on 10-year Treasury futures. I'm Anna Edwards in London with Matt Miller in New York. And Matt, European stocks a little lackluster this morning. US stocks, well, the futures look weaker, but maybe off their lows. A slow start to what could be quite a hectic week by the end.
Yeah, absolutely, because we have so much coming out in terms of earnings, right? And because it seems as if, at least to some extent, investors have shifted their focus to how companies do, how earnings do, away from what the Fed is going to do, although, of course, that'll change next week. Take a look at S&P futures right now, down about 0.2%. Not a lot of movement, and we're still on track for the tightest trading range in a month since 2017. There just hasn't been a heck of a lot of movement in April, which I guess is fine if you're long stocks, right? Because the S&P is still up about 8% year to date. The U.S. 10-year yield comes down just a little, 3 basis points to 353, 354, essentially at the same level as we saw for the last few trading sessions. The same is true of NYMEX crude. 77.69, just sort of hovering here until we start to feel the effects maybe of the production cuts from OPEC plus, or demand picks up from the reopening in China. Bitcoin right now down another $200 and change, down to below 28,000, 27,287. So a little bit more profit taking, it looks like, from crypto investors after Bitcoin peaked above $30,000 in the most recent run-up. Take a look at some movers. They're not a heck of a lot pre-market, but maybe because we're waiting for so much in terms of earnings today. Coca-Cola, I believe. Wait, what day is it? Is it the 24th? It's the 24th, right? Coca-Cola out before the bell today. Bed Bath & Beyond is one that, I mean, this company has been left for dead on a few different occasions and then come back like a zombie, but now they have actually filed for Chapter 11 bankruptcy over the weekend. They say they have plans to wind down by June. If you have any coupons, be sure to turn them in by April 26th because they won't honor them after that at Bed Bath & Beyond. 18 cents a share in the pre-market. Tesla down another 1%. Of course, there was a little bit of a roller coaster last week because of cutting prices and then raising prices on 2 very different model groups. Nonetheless, that seems to be driving sentiment. And Craig Trudell and Sean O'Kane have a great story out on Bloomberg News about the fact that Musk essentially says he could wipe away his margins to zero on car sales because he can make money on over-the-air software updates for autonomous driving. And then, you know, Stellantis is just seemed to have a lot of volatility lately. It's down 6.7% in the pre-market. Now, could be incredibly thin volume. It is incredibly thin volume, but we've just seen a really high beta on this stock, and I think it's interesting. They make Maseratis, Fiats, Chrysler, Dodge, a whole host of brands after the combination of Peugeot Citroën with FCA, and we're just seeing a lot of movement, so I thought I'd draw attention to it. Also, I'm still waiting for my Dodge Challenger, which I ordered a few months ago, Anna.
Yeah, thank you, Matt, for that look at the movers and some public service announcements within there as well. In terms of the auto sector, we saw a lot of movement, didn't we, on the back of the Tesla numbers last week, and we'll keep an eye on that sector. As you rightly point out, there's some movement there, Matt. Broadly, we're not seeing any movement across European stocks today. We're entirely flat, so giving up some of the losses of earlier on, which is perhaps good news at the margin if you're long of stocks. So we're flat on entirely unchanged on stocks here in Europe. UBS is not flat, though. One sector that is going higher is financial services, and that, of course, includes Credit Suisse, but we know what Credit Suisse is worth. We got the numbers from them today, and who does that matter to? Well, really, it matters to shareholders in UBS, and so the UBS share price going higher is an interesting indicator there on the market's assessment of those Credit Suisse outflows and write-downs. The stock up by 1.9%. We'll hear from UBS tomorrow. Philips in focus, that healthcare business in the Netherlands, up by more than 12%. Pleasing the market, it seems, with the numbers, also some of the cost-cutting. That offsets concerns around legal costs that they have to incur there, and the pound is up just 0.2%. We saw S&P deciding to take the outlook from negative to stable. That happened on Friday, just after the close, so that having a bit of an impact, perhaps. A lot of macro data due at the end of the week from here in Europe, and plenty of earnings before we get to that, Matt.
You know, let's talk about that macro data versus earnings right now with Maria Faimana, senior multi-asset strategist over at State Street. Maria, it does feel like the market is poised to pay attention to earnings and not so worried about, you know, the Fed, rate hikes, inflation, et cetera. Do I get the right feeling for this week? Are we worried a little bit less about the macro for now?
Yeah, absolutely. I mean, to be honest, we've been waiting for a week like that for, I don't know, since the start of the year, because last year was all about Fed, right? So it was, for equity market, what driven equity market was multiple compression. So we were waiting for, okay, what's the next thing? And now we're getting into the world where, okay, we're getting close to peak in Fed hiking cycle. We potentially, I mean, we're very likely going into recession. So let's look at companies, which companies can defend their margins better, can sustain some profitability or see less earnings decline. So it's really about earnings. And I think that's great news for kind of equity investors, like top-down analysts, so we can actually do things we like doing, and it matters.
Maria, good morning. Can I ask you about hedge fund positioning or positioning generally and what that, where that takes us? Because I was interested today in these stories we've been covering here at Bloomberg. Hedge funds short 10-year treasuries. That might lead to a conclusion that they see better times ahead for the US economy. But then also short stocks. The most they've been short stocks on the S&P, at least, in the past 12 years, which could be a sort of opposite interpretation. Maybe these are different hedge funds. But what do you take away from this kind of positioning conversation?
I mean, first of all, kind of commenting on hedge fund, I think that's basically saying there is a massive degree of uncertainties. So on one hand, you expect recession, on the other, it's not. So that's kind of the first point. But the second point, probably more important, is like when we look at institutional investors' positioning, we see very similar kind of level of uncertainty. Yes, investors are increasing allocation to cash, but not significantly. So yes, they're worried about recession, but it's quite recent. And I think the kind of earnings season would be very important kind of catalyst in that earnings are really falling, and that would be kind of indication of recession. And then we'll see bigger reallocation of positioning.
Okay, so yeah, so a lot of uncertainty out there. We'll wait for more clues from the earnings story. We're going to start to hear from the big European industrials, consumer giants, Maria. What kind of messages are you looking out for from these type of businesses?
I think for us it's really important to see the guidance. It's really interesting, particularly in Europe, but I mean, true in US, but more so in Europe, that consensus expect some weakness in the kind of first half of this year and then recover in the second half of the year. To us, that's kind of really difficult to square up with what fixed income market is expecting, which is kind of, okay, we're more likely to go into recession. We have like inverted yield curve. We're expecting Fed to start cutting rates. So that's very, very inconsistent with what equity analysts are expecting as earnings recover in the second half of the year. So industrial companies.
Wait, you expect the
and
Fed to
like
start cutting rates?
Sorry?
Did you say you expect the Fed to start cutting rates?
No, fixed income market is expecting like futures pricing rate cuts.
Oh, right, on work.
I would be very surprised that if that happens, given economies still kind of we see quite a lot of inflation there.
Yeah, I wanted to ask you about that. So we have the Fed meeting. What is it already next week? Is this the last hike that you expect from the Fed, 25 basis points and pause? Or do you think there could be a couple more? And also, pause for the rest of the year? Do you think we're going to see cuts in 23 or not until 2024?
Yeah, I would say, I mean, the first thing to say is that what we see in inflation, particularly in service inflation, is still quite sticky. So we are not in the world where inflation just gone away. So I think the conversation about cuts, that's completely premature. Cuts this year is completely premature. And I would not be surprised that after we have a hike next week, we begin to look at the data. We will continue to look at the data and see that actually it is still quite strong. We might need another one. So I'm in much more hawkish camp than perhaps consensus is.
Maria, thank you very much. Thanks for joining us. Maria Wakeman from State Street with us to talk about stocks. We'll talk FX next. Coming up, James Lord, Morgan Stanley Global Head of FX and EM Strategy, joins us. Does he have a similar view on the outlook for the Fed? What does that mean for his dollar call? And where does that leave emerging market FX? This is Bloomberg.
Ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
The medium-term trend is for a very aggressive weakening in the U.S. dollar because we unwind the stagflation trade of last year.
I do think it is a time for dollar weakness. We could be seeing the Fed peaking a bit earlier than other central banks, which means there are better yields to be had for that level of safety elsewhere.
Is it that a slowing down U.S. economy is necessarily going to be supportive for the dollar? Or is it that because people are coming back to U.S. Treasuries, that inflow actually makes a difference?
The strong dollar had been a headwind for emerging markets. Our view is that it likely does weaken from here because the U.S., in terms of interest rate hikes, likely one and done in May.
I don't really believe that the dollar can really weaken significantly. Certainly, I think it's going to be choppy. There's going to be bouts and risk appetite appears better. But I think we're in for perhaps a rocky ride still for the rest of this year.
A few of our guests there discussing their outlook on the greenback. According to the latest MLive Pulse survey, investors see the dollar sliding even further from last year's two-decade highs. Joining us now is James Lord, Morgan Stanley Global Head of FX and EM Strategy. And James, you know, it's really interesting. We saw the Bloomberg Dollar Index rise to 1350 and change at the end of last year. We're now down to, let's see, 1224, if I'm seeing this correctly. How much farther do you think it could fall if you're bearish the dollar?
So we take a slightly different view on the dollar to, I think, the general sentiment that you were just showing on your last clip there. Like, we've actually turned bullish on the dollar. So we're moving in the other direction. We actually think that euro dollar can head back down to, say, 103. The Dixie can test the highs that we saw back in the beginning of March. We think that the consensus is a little bit offside on this one. We can certainly see the positioning has built up to become quite short the dollar. And we think this is a good time to be moving tactically in the other direction.
So where do you think the best gainers are or the best losers are against the dollar? I mean, if you think it's going to appreciate against which currencies the most?
Yeah, so euro is one, as I mentioned, and then within the EM context, we like dollar against short Chilean peso. But the overall dollar thesis that we have is very much that the market is underpricing the risks of a US slowdown, but also importantly, underpricing the risks of that slowdown spilling over into the rest of the world. I mean, I think US economy is clearly quite weak at the moment, and the market sort of narrative around that is that the weakness will be sort of isolated to the US economy. But no economy is an island. As the US economy slows, it will increasingly spill over into the rest of the world. And I think that's the bit that the market is sort of missing at the moment. We're sort of in this phase where the market is increasingly seeing the US slowdown, but is treating it as a sort of isolated event. And I think that's what we really want to push back on. The Eurozone economy... Yeah, go ahead.
Sorry, James, I was going to say, and do you think that would be positive for the dollar then? So a slowdown in the US, because of haven status, is that the thing that wins out against the other currencies?
Exactly, yeah. So you get a little bit of safe haven demand for the dollar that pushes the dollar up, but crucially, you get the market to question the growth in the rest of the world. So at the moment, for example, you see ECB pricing of rate hikes moving up quickly, like more, and you're starting to see 75 basis points of rate hikes being priced in for the ECB, with just one for the US before some easing cycle starts later in the year. That kind of divergence may get called into question if the US economy slows down even further, and people will start to reassess their outlook for the Eurozone. Right now, the Eurozone is sort of stagnating in terms of its economic activity, but an external shock, like a slowdown in the US, I think would tip the risks more towards a slower economy in the second half of the year.
Okay, I want to ask you about the pound, James, as well, because we saw after hours on Friday, we saw the S&P deciding to upgrade the outlook to stable from negative. There do seem to have been quite a few people rethinking where the UK economy goes, and I wonder how that translates into the pound for you.
We have a neutral view on the pound at the moment. We don't have a formal recommendation in terms of an outright trade, certainly against the dollar. I mean, I would say that if we're right on our dollar call and euro dollar heads down, I would expect cable to come under a little bit of pressure. But yeah, I mean, there's no denying that the outlook for the UK has improved a little bit compared to what we saw through the sort of final months of 2022. But very much the growth outlook is weak, and with the current account deficit and a lot of external financing needs, I think cable would probably head lower if we were right on our broader dollar call.
What about the yen, James? I mean, especially if UEDA comes in and makes changes. I know they're not expected so soon, but over the longer term, where do you see the yen going against the dollar?
Yeah, so we actually have a short dollar yen view at the moment. So this is the only place where we do have a short dollar position. And we would expect the yen in the global scenario that we're expecting, where global growth fears increase, we would expect yen to benefit from safe haven demand as well. So it's very much linked to the kind of broader narrative that we have on FX markets. But clearly, you know, this having a short dollar yen position on does give you a little bit of exposure to the possibility that something happens with BOJ this week. I mean, we're not expecting any tweak to yield curve control at this meeting, but we put a sort of subjective probability of maybe 20% that you could see an early move. And yeah, I mean, if that does come through and there is an exit from YCC over subsequent months, yeah, this should be something that puts a little bit of downward pressure on dollar yen. I mean, the argument for them to do it in this meeting is really because nobody's expecting it, right? I mean, the market pricing is, markets are quite stable. Nobody's really testing YCC at the moment. So, you know, they have flexibility to kind of make a tweak this time. But, you know, UEDA's been quite clear they're not really thinking about doing it. So that is our base case for this meeting.
Okay, yeah. Thanks, James. He's also been quite clear about the value of surprise, though, to your other point. James Lord, thank you very much joining us there from Morgan Stanley with his thoughts on FX markets. James was talking there in passing about the Eurozone economy stagnating. What has not been stagnating is the market cap of some of the big luxury names in Europe. LVMH, the market value there, the luxury business based in Paris, hitting $500 billion. That's the first time a European listed company has achieved that kind of market capitalization. So an incredible achievement. You could still fit 5 of them into an Apple, of course, but that's the European record right now. Coming up on the program, First Republic is out with earnings after the bell today. We'll be back to the bank earnings story. We'll get a preview next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Welcome to the the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now, U.S. regional banks continue to report earnings today, with First Republic reporting after the closing bell. Investors are going to be watching, obviously, for deposit flows and funding cost expectations. Sonali Basak, our tireless global finance correspondent, joins us now in the studio for a preview. So this is one that we've all been watching, including Jamie Dimon, right?
Yeah, everybody's been watching it. Jamie Dimon, Bank of America, and it's because they had just flooded this bank with $30 billion worth of deposits coming from the biggest banks in the United States. Now, the pressure on the deposits, of course, is the main story here. It's First Republic out of the woods here. But then there's that secondary problem, and we've seen it with all of the other regional banks. How much is their business itself under pressure with that pressure on deposits? Even if things have stabilized, what does their business model look like moving forward and their ability to bring in money? We know this bank has been under tremendous pressure in trading this year.
Right, absolutely. And where this business goes next is a crucial question. Just reading through some of the analyst commentary, Sonali, ahead of these numbers, Wedbush talking about it facing a Hobson's choice in which it has no choice but to move forward as a standalone business, suggesting there are many things in the way of any kind of M&A. I guess we'll be looking for all kinds of clues on that front today.
We will, absolutely. And remember, you have to think about how the FDIC process has worked for the previous banks that have looked to either fall into receivership or sell assets. The firms that have looked to sell assets before they hit dire trouble, we've seen some examples here where it's worked pretty well. We don't know the buyers of all the loans that have announced, for the regional banks that have announced loan sales, asset sales, but we have seen, for example, PacWest shore up liquidity after SVB in a way that has been meaningful. Now, will First Republic have to sell any assets, let alone any standalone merger? I think that is one question. Can they shore up any liquidity that way as well? Is there any other way that they're going to announce a way to clean up their balance sheet even more ahead of, remember, a lot of these deposits that have come in from the banks, they have a time limit to them. They are uninsured deposits. So at some point, First Republic needs to have its own solution here, aside from what the big banks have already done.
So in terms of the regional banks we've seen so far and what we expect to come, this is the biggest problem of them, right?
Yeah, it certainly is. I mean, this is not an all-clear moment until we see First Republic. And remember, the reason we're talking about First Republic is if it were to hit more trouble here, there would be greater ripple effects. That's why the big banks had stepped in. Now, if you look at last week alone, I think there's another question under the surface here on how much more pressure this banking system can sustain. What happens at the end of the year? You look at last week, a lot of these firms have said they're kind of out of the woods here, they have stabilized, but then we've also seen borrowing tick up again from the Federal Reserve's emergency facilities. Yep. We've also seen last week the KBW banking index essentially flat after what investors would have considered good news. Yep. So again, the pressure that's sustained, even if today isn't all clear, is still the looming question over the industry.
All right, Sonali, thanks very much. Sonali Basak, our global finance reporter covering the banks for us. I want to just quickly, it's not really a correct, but we were looking at Stellantis shares, and they're down considerably in the pre-market. I thought, you know, it's just a high beta stock. It's not really a high beta stock, 1.16 to the S&P. And a viewer writes in and says, no, it's going ex-dividend today. So that completely explains, and then some, the drop in the shares, off 7% in the pre-market. Anna?
That is it for Early Edition. Surveillance is ahead. This is Bloomberg.
actors are thrilled if they have one part like Rocky in their whole career.
Yeah.
You had another one, Rambo.
Yeah.
Now, Rambo was not something you created, is that right?
No, Rambo was a novel by David Morrell, and I was the 11th choice. Everyone, it was like, I don't know who was next after me because they had gone through everyone, and it passed, including 3 different directors. So this had become sort of a pariah of sorts. The first time we go in there, Rambo was, in the original screenplay, was horrible. He was a psychopath. He killed children, he killed fishermen, this and that. So I said, if I'm going to get involved with this, I see the character going on beyond this. And they said, what do you want to do? I said, I want to rewrite the screenplay. And I want him to go right to the edge of violence, right to the point where he's being pushed, but he pulls back because, similar to James Dean in East of Eden, he wanted to be accepted back into the family of man.
So if Rambo got in a fight with Rocky, who would win?
Rambo.
Rambo.
Easy. But
Because-
not even a fight. Unless it's in a ring. See, first of all, Rambo is a killer, for real. He's almost a psychopath when that switch flips. Rocky is a good guy. You know, he has mercy. The other one has no mercy.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
It's a really tricky time for the market because things are slowing.
Growth continues to slow, and that continues to pressure profits.
There's just a lot of great news priced into great companies right now.
If the consensus is talking about some sort of cliff dive moment in the second quarter, that's not happening.
This is ultimately really going to be, I think, a defining earnings season for winners and losers.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Equity futures on the S&P 500 down about 0.2%. Wrapping up the bank earnings with First Republic a little bit later on this afternoon. Looking ahead and pushing forward to tech results, Tom, reporting later this week.
This is key, and I love the Dan Ives comment there, the winners and losers. And I think when we get to Apple May 4th, we're going to have an idea of the winners and the losers. To start strong this week with Margie Patel with her tech ownership is pretty cool. I think tech is frankly as important as the banks.
Looking forward to that conversation, Tom. Tomorrow we get Google, Microsoft onto Wednesday, Meta, Thursday, Amazon. Can we just start this morning with LVMH? LVMH over in Europe, big red headline crossing a Bloomberg moments ago. LVMH market value hitting $500 billion, the first for a European listed company.
Chris Bryant owns this story this morning with Bloomberg News, and he reports on the rate of change there in the new Europe. And this goes back, John, to the IMF meetings and talking to the former Prime Minister of Italy, Gentiloni, about eurosclerosis. And maybe the eurosclerosis in some way is finally gone.
And consumer boom time over in China, making a comeback, helping out this name as well. We caught up with Patrick Armstrong on Friday of Plurimi Wealth. Lisa, this quote from him: if you feel safe owning it, it's probably too expensive. What did he sell in the last quarter? He sold LVMH after some big gains year to date.
And looking now at Hermes as a potential, add-on to that, this idea of when do you consolidate your gains? When have we priced in fully the China recovery, the consumer spending? Is that really what we're seeing in terms of the unexpected boom in certain European areas? Because they are concentrated in the luxury sectors, and we cannot ignore that.
We'll return to that story in just a moment. I want to pick up on this as well. We got some numbers on the panic of Q1 for Credit Suisse. And these are the numbers. Credit Suisse saw $69 billion in outflows in Q1, ultimately culminating in the deal that was done with UBS. So what's interesting about this is the Swiss bank, according to our reporting, lost more than 200 billion Swiss of customer deposits over 6 months. So 4Q22 was that much worse than 1Q 2023. I would have expected those numbers for Q1 23 to be a whole lot worse than they turn out to be.
I wonder if they keep going here. I mean, the whole thing is a triage they have to do. And again, and particularly for our American audience waking up this morning, this is incredibly a Swiss domestic issue. We have to look at it within the prism of domestic politics and emotion among the cantons of Switzerland.
And my main question was, what does this mean in terms of how difficult or less difficult will it be for UBS? And I'm looking at UBS shares up about 2% after this earnings report. To me, the difficulty was, I think about 250 managers, money managers had left, so that they were losing talent, and this is one of the key issues. How do you keep the talent while also having the ambiguity of what a 4-year potentially process could mean of acquiring Credit Suisse?
On a McKinsey basis, did they get this done quickly, or is this one of these 3-year grand plans? I can't imagine they can do this, John, over 3 years.
They're going to have to grind through a ton of questions anyway. They've signaled it could take 3 to 4 years, up to 4 years, something like that's the guidance. But to go back to the numbers again, given the way the regulators behaved that weekend, how that news conference went, if you just listened to that news conference and went back over it all over again, and then you were asked to guess what the outflows were, I'm not sure, Tom, you would have come up with 69 billion. I would have come up with something much, much worse than that number. I would have thought Q1 was that much worse than Q4.
I would agree.
I just don't know. I wonder what forward the wealth management assets look like for UBS, and I think that's open to question as well.
Well, first thing Lisa said this morning, look at UBS stock. Positive, so maybe that tells you something, up about 2%. Let's push forward and get through the price action. The equity market is negative on the S&P by 0.2%. Last week, an absolute snoozer. On the week, down about 0.1% on the S&P 500. So far this month, Tom, I think we've had a move of positive 0.6% on the S&P.
On radio, I'm squeezing my fingers together. What you do is you look at the moving averages. In my case, John, exponential moving averages. There are 3 of them. And what happens when you snooze is they conflate together in a point. We're not at a perfect point now, but it does speak to the quiet that's out there. I think it's based off earnings as well. Mike Wilson's right about that at Morgan Stanley.
The bond market has not been a snooze. The 10-year yield lower by about 3 basis points. The 10-year this morning, 3.54. Lisa, the 2-year, north of 4%, still coming in a couple of basis points. Let's call this 4.16.
When you talk about the very narrow ranges on equities, perhaps not in the bond market, it goes to the uncertainty of whether we're accelerating or decelerating when it comes to the economy. And different sectors have different images. U.S. Chicago Fed National Index for the month of March coming out at 8:30, and U.S. Dallas Fed manufacturing activity for April. I'm very curious to see whether they reflect the unexpected pop that we saw in manufacturing indexes last week, which I thought was interesting. Are we seeing a turn after the recession in this one particular area that was really driving the sort of optimism of a disinflationary kind of momentum? Today we also get, and this is really going to be interesting, Tom, you talk about the VIX index all the time. Look at how low it is. This doesn't really raise concerns. Well, some people say it's just not accurate. And so the CBOE Global Markets is launching this new one-day version of this particular index that's supposed to more accurately reflect the volatility in day-to-day trading. This perhaps will give some indication of why there has been this massive divergence between the VIX index and the MOVE index, which tracks bond market volatility. This has been one of the biggest questions. Why are we not seeing that if so many people are so bearish? And after market, we are getting First Republic Bank earnings, and this comes after we've seen a slew of regional bank earnings that have not lifted the KBW Regional Bank Index. And John, I think that's interesting because we have gotten a lot of news. It hasn't been terrible. We haven't gotten catastrophic surprises, and yet hasn't been enough to resurrect valuations that have been severely damaged over the past couple of months.
It's a really good point. Lisa, thanks for that. Joining us now, Margie Patel of Allspring Global Investments. Margie, wonderful to catch up with you. Tom mentioned this conversation at the very start of the program, pushing forward to tech earnings later this week. Margie, you still hold a lot of tag. Can you walk us through where you're taking that equity exposure at the moment, going into results later this week?
Well, this is going to be a huge week for stocks. A huge number of companies are reporting. We still like the tech sector because certainly the understanding that there's a lot of inventory to be worked off, that we may have to wait for the second half of the year to see a turn in demand is well understood. And the stocks have anticipated that. Most have performed really well. So the question is, can they have decent results and the markets really go down because of that? We think we'd rather ride that out and say these companies have long-term growth. They have good positions in their industry. industry strong balance sheets to withstand, even if we do have a deep recession.
Margie, I look at tech, and the rep here that so many people are afraid of is tech conservative. How do you determine a measured conservative cash flow from a high flyer that could be trouble?
Well, I don't really know about the high flyers. I like to avoid the high flyers that might have trouble, but just looking at companies that have improved their market position, who are, technological leaders, that have a lot of cash on their balance sheet, and also that pay a dividend. A lot of tech stocks pay a
Well,
dividend.
give us a
And we
name.
think that's a good sign.
Margie, give us a name. Come on, no one's watching.
Well, we think Broadcom is a
There you
good
go.
stock because it's diversified in a dividend.
All right, well, going forward, we talk about when to know when to cash out. Margie, we have seen a huge run in some of the big tech names that are profitable. They've really been, frankly, the backbone of any gains that we've gotten so far this year. When do you say that's enough?
Well, I think that's true, but on a relative basis, we really don't know how deep of a economic correction we're going to have. Will it be mild? Will it be more severe? And so tech prices may come down because PEs have expanded. However, we don't know if other sectors will have very disappointing earnings if we have a big recession. So that's kind of the push and pull in the market of where you want to be positioned.
Have you been surprised at the market's reaction to some of these earnings, Margie? And I ask because people have been waiting for the earnings recession, and in certain areas, it's come, and markets don't care. I mean, what do you make of that?
No. Well, so far this earnings season, which is really only about 20% or so, the results have been surprisingly good. And the market was really looking for signs that companies would tone down their earnings expectation, the quarter would be disappointing, and it hasn't been. So we're still waiting for that correction we haven't seen.
We have seen a correction, though, in net interest margins at the smaller banks. Lisa talked about this through most of last week as we got a drip feed of news from small and medium-sized lenders in the United States. Margie, just in terms of taking a step back and trying to understand the broader economy, what is the relationship between declining net interest margins and bank lending to the rest of the economy?
Well, I think everything rolls back to the Fed and their super aggressive policy last year that really put the banks kind of in a box on net interest margin. So we think we have to see the yield curve get not so inverted as a big thing, and see a little more stability from the Fed. And we think we've already seen, even before the distress we saw in the first quarter, bank lending standards were tightening up. So they have already been on the watch, and I think are in pretty good shape as far as that is.
Expecting that to continue, potentially. We'll get some more data on that early next month. Margie, thank you for that. As always, Margie Bittal there of Allspring Global Investments. Quick reminder, some good news for you. No Fed speak this week. They're in a quiet period. The Federal Reserve decision is next week on May 3rd. May 4th, you're going to hear from the ECB the same day you get Apple earnings. So that's your tee up for next week. I want to go to a stat, just a number that we got from the team here at Bloomberg. Elena Popina, Jessica Menton putting this one together. Tom, wasn't aware of this. The divide between information technology and the S&P, I think we understand that, but let's put some numbers on it.
Yeah, please.
S&P 500 IT index up 19% in 2023. The S&P 500 up close to 8%. That is Infotech's strongest start to a year relative to the S&P 500 since 2009. That is a big gap that's opened up.
Well, it is. I look at this and I think we're recalibrating. I had the plague last week at the end of the week. It's called doing a Tottenham. And, I had the plague and I really thought about this, John, equity return. And basically we're back out of the bear market. I mean, that's a fact that bears have to adjust to, led by technology coming off the mat. 12 months trailing statistics, John, I didn't know this. You go to the Bloomberg, the WEI function, and you can see this. And I mean, we're literally flat or down 3% where we were down 20%, and it's led by this tech recovery.
Well, but I will say that the interesting thing is the bifurcation, right? That there are a number of big stocks that are driving the rally, and everyone else, as Jurgen Timmer over at Fidelity said, is in nowhere's land. Basically, we're looking at a basically range-bound, market-weighted S&P, even as you have some of these cash-producing behemoths surge.
Thanks to Stuart Kaiser of Citi for this number. About 44% of the S&P 500 market cap reporting this week.
Yeah.
It's a big week coming up for bank earnings.
Big week.
What do you think Spurs are doing this morning, Tom? How do you think the players are?
They're instituting a rebuilding plan, the worst performance by a professional team ever I have
really
witnessed.
That bad?
Ever.
Wow.
It was appalling. I wanted Adele to come in and play fullback.
I have to admit, I was laughing. First 20 minutes, I was at home laughing. It was that bad.
Well,
it was brutal.
You're the pro on this, John. I think,
shocking.
John, you ought to fly over there and talk to them about the plan forward.
Yeah, maybe one day. S&P 500 futures, negative 0.2%, live from New York. Welcome back after a weekend. Back to work. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Another blow to France's President Macron and his push to enlist China's help on the war in Ukraine. China's ambassador to France told French TV that the former Soviet states don't have sovereign status as independent nations. Those comments triggered furious reactions, especially in the former Soviet bloc countries, Estonia, Latvia, and Lithuania. China has now backtracked and says it respects the independence of those countries. In Sudan, the international effort to evacuate diplomats and other expatriates picked up over the weekend. The U.S. and U.K. militaries were able to airlift their officials to safety. A temporary ceasefire between Sudan's army and the Rapid Support Forces militia it has battled since April 15th appeared to have failed. House Speaker Kevin McCarthy says the chamber will pass his $1.5 trillion debt ceiling increase this week. Still, Bloomberg's learned that McCarthy hasn't yet lined up all the votes he needs. McCarthy told Fox that President Biden must negotiate in order to avoid a U.S. default. Last week, the president called the Republican plan wacko. Credit Suisse reported $69 billion of outflows in the first quarter. It also took a large write-down at its wealth management unit. All that underscores the challenge for UBS in retaining key clients and assets following the emergency takeover. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Earnings season is here.
We haven't had a shocker yet.
They are minting money.
Markets are still volatile.
I think it's going to be choppy.
Bloomberg breaks the numbers first.
First quarter results, impressive.
The revenue beat is amazing.
With exclusive expert analysis.
This is really important to watch.
Buy on the fear, sell on the news.
Where is the upside in this market?
Do we get answers to that today?
The bottom line speaks for itself, and that's what moves markets.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
I cannot imagine someone in our conference that would want to go along with Biden's reckless spending. This is responsible. This is something that we have sat down for months, that everybody's had input in. We will hold a vote this week, and we will pass it, and we will send it to the Senate.
The repercussions of this are huge if you go forward as McCarthy wants. What will happen? You will literally see interest rates go up for mortgages, for loans. You're going to see the stock market plummet again.
This debate is truly worse than Fed speak. That was House Speaker Kevin McCarthy on Fox News over the weekend. Democratic Senator Amy Klobuchar on CNN. This conversation is going to continue up until and maybe beyond the X date. That's a conversation we can have in just a moment. The broader market looks like this morning, and good morning to you. Welcome to the program. Pushing ahead to earnings from big tech later this week. After the bell, a little bit later, after the close, you're going to hear from First Republic. A lot of struggles for that bank in the first quarter. We'll put some numbers on it a little bit later. In the equity market, futures negative 0.2% on the S&P. Yields come in 3 basis points on a 10-year, 353.94. And if you want to talk politics, just briefly, do you want to talk diplomacy or lack thereof? The Chinese ambassador telling French TV over the weekend that ex-Soviet states don't have sovereign status as independent nations. And then today, this from the foreign ministry spokeswoman of the Chinese Communist Party: China respects the status of the former Soviet republics as sovereign countries after the Soviet Union's dissolution. Maybe things you don't want to wake up and say on a Monday morning. You know, that's probably one of them, Tom.
And the speed of the new media. I mean, it used to be by carrier pigeon and fountain pen. And the answer is, with the media, all these nations put foot in mouth. It usually happens on the weekend, I sort of think.
Yeah.
You know, and foot in mouth, and then you correct it and move on. I guess that's what they did.
They've corrected it, and we'll move on.
Know, but it goes.
Maybe.
Well, that's what I was going to say. I don't think that they can move on that quickly from this kind of thing, just simply because it confirms people's suspicions that they're perhaps more in Russia's pocket than people previously thought.
We should talk with the terrible war. We're talking about a calendar item in April of earnings. How about a calendar item in April of what you do in war, which is wars start now? And of course, literally as we speak, I know Anne-Marie Orden is looking at this on the eastern front of the river, north-south through Ukraine. They're getting ready for a summer offensive.
When we've made some diplomatic errors under this administration, haven't we decided to call it strategic ambiguity? Haven't we done that a few times?
Yeah.
This administration, this White House.
I'd ask the deputy.
Was this over the weekend
Prime Minister of the UK
with the Chinese government? Was this strategic ambiguity? Or was that truly a mistake?
I don't know. You just don't know, except it's foot and mouth corrected. That seems to be where we're going. Speaking of foot and mouth, he's very clear in his analysis of Washington. Terry Haynes joins us, founder of Pangea Policy. Terry, I'm very big on expect the unexpected, and to use that word suddenly, there it is. Tax receipts came in a little light, moving this debt crisis discussion from autumn maybe forward, and dare I say, to June as well. Were you surprised that tax receipts for the IRS came in light?
Not particularly, because the IRS itself warns that it's pretty early, and that was done just before the April 17th deadline. So, you know, I'd expect them, frankly, to bounce back up a little bit. That doesn't mean that we're going to get a lot of wiggle room or a lot of breathing room in terms of dealing with the debt ceiling. They're still going to have to do that in the summer, I think.
The Bloomberg surveillance audience has been looking to autumn, where everybody, you know, it's solved over a weekend. They have a meeting and go, never mind, it didn't happen. And all of a sudden, that's pulled forward. Where is it pulled forward to you? Is it June? Is it July?
I'd say more likely July. I mean, look, I've looked at the past year's receipts, and you know, we've had just in the last fiscal year receipts that were bigger than anticipated. So I think the thumb on the scale here is in for a little more time rather than a little bit less. But still, you know, that's in political terms, that's not very far away at all. And, you know, it is concerning to me that there really haven't been a start to negotiations. I've been saying for 6 months, this is 30-40% likely to result in default. And, you know, I've unfortunately have no reason to change that view.
Terry, I love how John framed this, that basically this is worse than even listening to Fed speak and gaming out what the Fed's going to do, which is a great kind of metric bar to cross. How much do people also hate this discussion of Joe Biden versus Donald Trump yet again? And this seems to be what's coming to the fore. We're expecting to hear perhaps from Joe Biden tomorrow that he is officially running again. And yet, if you look at a recent NBC poll, this is not a popular option. It is not what people want to see in terms of this particular pairing.
I take issue with some of your headline writers who wrote that a Trump-Biden rematch is something that voters are souring on. I wasn't aware they were anything but sour, frankly. I'll be a little non-consensus about this. Think of it this way. Republicans, about four out of 10 want Trump. What that means is about 6 out of 10 don't. And there's a clear alternative in DeSantis that helps DeSantis. On the Democratic side, there's little to no enthusiasm, a real short bench, no real challengers. The mild surprise here is that you had on Friday, you had 6 national polls for president, and polls are what they are, of course. 4 with Biden as the Democrat matcher and 2 with Harris. And Democrats lost 5 out of those 6. Now, they were all tight, but Democrats still lose 5 out of those 6, whether it's Trump or DeSantis. So, this is teetering as we speak, as Biden prepares to announce. And, then I don't think independents really help that much, because independents tend to self-identify with one party or another, even though they don't want to formally call themselves D or R.
So what does this mean in terms of the enthusiasm for this next election? And frankly, going back to the debt ceiling debate, how this plays into something that seems like just a repeat of what we've already seen before?
I only learned 3 things in law school. One of them is to say it depends as much as possible. And in this case, it depends on Trump. And that's you'll find that among a lot of political professionals as well. There's a lot more enthusiasm on the Democratic side if it's Trump you're trying to beat, but if it's somebody else, then there's probably a lot less enthusiasm. And I think the polls in the election probably run based on that assumption.
Terry, just taking a temperature of the media over the weekend, I don't know about you, but I saw several articles declaring the death of a campaign that was never formally announced. Ron DeSantis, the governor of Florida. Terry, I just wonder what you make of that and whether it stacks up with what you're seeing in the polls.
I think Governor DeSantis' demise is premature, to say the least. As I say, I think he's in the position of being the major Trump alternative. That's a position that he wants to be in. I don't think he's interested in being the front runner here, because you get all the slings and arrows at you if you are the front runner. I think he's been surprised to some extent by the focus and energy of the developing Trump campaign, as well as the supposed apostasy of a lot of Florida members who you think might support him, who are instead going to Trump. To me, that's all fixable. That has a lot more to do with a signal being sent to DeSantis by Florida legislators that he'd better pay attention to them than anything else.
Hey, Terry, wonderful to get your perspective on these things. As always, Terry Haynes there of Pangea Policy. Tom, let's start with the debt ceiling, maybe finish there. The debt ceiling ex-date after the tax receipts of last week, Mike McKee did a great job of breaking this down for us on this program. It feels like it's got a little bit closer, doesn't it?
Yeah, it's absolutely got closer here. I am completely biased on this from my childhood, where like a Swiss watch, every number of years, this was a crisis, and the crisis always goes away. 2011 was sporting, to say the least. But the answer is I'm hugely biased, like Wall Street, to say, okay, fine, Terry, talk about it, but it'll go away. And yet, I'm watching markets say to me, including CDSU, yes, maybe this time is
different.
There
is always that worry.
This is Lisa's world. Why are you talking to me? Talk to Bramwell.
There is always that worry.
Well, things have gotten that much more polarized. This really just sort of exemplifies, once again, how partisan Wall Street has gotten and Washington has gotten.
Jens Nordvig of Advante Data is coming up very shortly. Looking forward to that conversation with your FX market. Seeing a euro back through 110.11 on euro dollar.
the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
While I like home runs and grand slams in baseball, at A-Rod Corp here, we shoot for singles and doubles, and we definitely never want to strike out.
Live from New York, welcome to the program. Here's your equity market on the S&P 500. Slightly softer, negative. Starting the week this Monday, down about 0.2%. On the Nasdaq, negative 0.2% after some marginal losses on the benchmark, the S&P, just last week, down by 0.1%. In the bond market, 2-year, 10-year, 30-year, we look like this. Yields lower by 2 basis points on a 2-year, 4.1585. The whole of last week, Monday through Friday, your 2-year yield north of 4%. The Fed goes quiet. This bond market has been anything but. Of course, it's not just the Federal Reserve that has to decide next week. It's also the ECB. Let's finish on euro dollar. Quick, brief look at things right now on the euro. We are at 110.10, a breakthrough 110 again. 110.10, we're positive by 0.2%. The euro showing just a little bit of strength as we count you down to the Fed decision next Wednesday, followed by the ECB on Thursday. Jens Nordvig of Exante Data weighing in and writing this. At this point, we do not have high conviction in the May catalyst of a Fed pause, but we think there will be ECB and Fed divergence over the coming 3 to 4 months as the ECB has more work to do and less banking tension uncertainty. TK, I don't think he's the only one that shares that view.
But he really carries authority here. His book on the euro was definitive coming out of the great financial crisis. Jens Nordvig joins us right now, an important moment with Exante Data. Jens, perfect timing here. We see the arch other pair, euro-yen, breakout. Strong euro weekend, technically through 148 is a huge deal against strong euro. Explain to mere mortals what the significance of a euro-yen breakout means.
Yeah, so we've had a situation here over the last month or so, right, where we had significant banking tension. It was not just in the U.S. We also saw pressure on Credit Suisse, Deutsche Bank, and so forth. And we've had a significant relief from that. So we've had euro-yen essentially go up 4 or 5% from those lows. So it's a very significant bounce as those banking tension concerns in the Eurozone have really been pushed in the background. In the US, it's a little bit more complicated. But so we have a very significant movement. At the same time, we continue to have this elevated speculation about whether the Bank of Japan is going to do something, right? We've had incredible volatility around Bank of Japan meetings. We have another one this week. And now the new Bank of Japan leadership is essentially signaling that they will still be patient. So I wouldn't say it's still the same as Corona, right? But they're signaling that they are not in a rush to exit from the easing. So those are the things that's really pushing euro-yen pretty significantly higher.
Jens, your book on the euro 10, 15 years ago was definitive on what the euro needs to be. Has Europe escaped eurosclerosis? Has Europe, you know, with the experiment coming out of the advent of the euro, have they escaped that permanent unemployment? Have they found a more Anglo-Saxon prosperity?
We continue to see that when there's a crisis in Europe, the leadership tends to come together and do more stuff that they've been willing to do in the past, right? So the coronavirus episode was another example of them doing more next generation EU funds are still being dispersed around the European Union to support countries that need it. So we have essentially a degree of fiscal union building, right? So that was something that was missing, and we're having a degree of it. That's certainly helping on that front. There's a lot of talk about having a banking union as well, right? When you have banking tension, there's focus on supporting the banking system in various ways. And we're having that discussion again, right? So we're not there yet. But I think the one thing that's really important that is different from when I wrote that book is we had those political tension that caused uncertainty about, okay, do the different countries have the willingness to do what it takes to stay in the Eurozone? We don't really have those debates at the moment. There's no debate in Italy about leaving the Euro right now. There's no debate in Spain or other countries, right? So if you do opinion polls, do people want to stick with the Euro? There's actually rising support for the Euro. So that's something that cements the Euro status, despite all the difficulties there is with economic integration and so forth.
This was the reason why, Jens, a lot of people earlier this year said that European equities in particular were a real place of brightness for the full year, given not only all of this potential optimism, but also this idea that they're not as tech heavy at a time when there would be a rotation out of that. Well, it hasn't really worked out that way, and you've seen actually big tech continue to lead in the U.S. What is that going to shift? Is Europe ever going to basically create some other complex like it to rival the tech giants in the U.S.?
Well, so the European stock trade, like for example in banking space, has worked out, right? So BNP has recovered 20% from the lows, is up significantly on the year. So the fact that interest rates are rising is creating a different environment for equities, and banks have done very well. Obviously, Europe doesn't have a tech sector, so on that front, tech sector to speak of, so on that front, the U.S. is going to be leading. But I think overall, we have a situation where European equity markets have outperformed the U.S. equity markets for the first time in a long time, right? You can argue whether it's Europe outperforming or the U.S. underperforming outside of tech, and that's something that's very interesting. Don't forget that we've had a situation where last year we had like a very, very serious energy crisis in the Eurozone, right? And now energy prices have dropped very notably, right? So part of the reason why we have the Euro strong, European stocks also can do relatively well this year is that energy crisis has abated. Consumer confidence has come back. You look at the services PMIs. Services PMIs have just risen over the last couple of months, right? So we've really recovered from that energy shock in a way that has supported the European economy. And obviously the ECB is still facing inflation, right? So the combination of too high inflation and growth that's actually getting better means that it's very, very hard for the ECB to relax. They have to continue going, as we heard today as well.
So Jens, basically it sounds like you are still very bullish on European banks and European equities more broadly, as well as the Euro.
So I was certainly I was tweeting very aggressively about it a month ago, and I actually did a summary tweet yesterday about it on my handle. Like there was no particular reason to think Deutsche Bank was just about to go under, right? And we've recovered from that dramatic shock, and I think there's still some reason to think that we're out of zero interest rate world that's supportive for the banking system overall. And for the Euro, the ECB is going to continue to support it. So I think the big question here is what is global growth going to do? That's super important for the dollar. And we have some question marks in Asia now. But that's the new things that we're starting to really focus on in our research right now.
Okay, let's go there. On China, how does China fit into speculating or betting on a given currency pair? Which pair gives you the greatest efficacy to play your China guess?
So typically when we've had, China stimulus, China growth recovery, it's been currencies like Aussie dollar that has benefited from it, Korean won. And we had a period in January and February where China-linked assets all around the world, from casino stocks to tourism stocks and so forth, all rallied hard. And now we've come to a point where it feels that some of those trades are very fully priced. And actually, it's sort of the longer-term growth concerns that are starting to feed into price action. We can see that in Chinese equities rolling over. We can see it in iron ore rolling over. So it's kind of one of those things where perhaps we got it very fully embedded and we start to look at the more medium-term picture as opposed to just that short-term shock.
So are you saying AUD-KRW is the most efficient pair to play a China guess?
So I think when you have a growth bounce in Europe, those are the assets that are moving. And I think right now, if we look And we have like very high frequency tracking of Chinese growth where we look at, okay, what is the momentum? And we can see at the end of March, that's when we kind of had a peak in Chinese growth. And since then, over the last 3-4 weeks, we've started to see the real momentum in the Chinese economy potentially peak out. And therefore, you have to be a little bit more careful with those sort of China growth sensitive assets right now.
Jens, wonderful to get your perspective on that. Jens Nordvik there, Fixante Data. Let's build on that perspective. At the end of September, you got a bottom in the currency pair, euro-dollar. A couple of days after that, also at the end of September, that kind of time frame, the Euro Stoxx 50 bottom. Euro Stoxx 50 since then is up more than 30%. European equity outperformance has been absolutely phenomenal. And what do we get this morning from the team at JP Morgan and the investment bank? Mislav Matejka writing this: "We are remaining overweight Europe versus the US for now, but think that the time to take profits on the trade is approaching." We've talked about the outperformance in tech to start this program ahead of tech earnings, and I think we're all thinking the same thing. Can that continue? Will the earnings validate it? Another part of this conversation as well is the outperformance regionally. So within the US, tech outperforms on a sector basis. When you look at things geographically, Europe outperforms. Now, does something have to give here? And is Mislav Matejka onto something over at JP Morgan, Tom? Is the time to take profits on the trade fast approaching?
It's easy to make alpha off the bottom if you guess it right, and that's the key phrase. You got to get it right, and up goes tech. And you mentioned, I think Facebook Meta is up like a gazillion. Nvidia
Meta's flying.
is another example of that. To Jens and folks, that was a world-class discussion there with Jens Nordvik of these dynamics. You got to have a belief or a bet, and I'm just looking at the biggest thing in the room, which is China, and the arch bet is, can they deliver what, Lisa, 4.5%, 5% growth, or do they deliver 6% growth and the gloom crew gets it wrong? I don't have an axe to grind in this.
Well, let's say that they do have 6% GDP growth. Let's say they achieve that, which some houses on Wall Street have actually upgraded it to. Will that actually give the boost to the global economy that many people are expecting?
What's Jay Pulaski say? He won't talk to me.
Well, you know what he says. He's very constructive on the global economy, very constructive on international outperformance.
There you go, Lisa.
But to Lisa's point, and I think Lisa's onto something, this is about what time frame you look at. It's not about 5 or 6. It's about whether we have those kind of numbers next year, and no one thinks so. So when you look at the market and what we're pricing, is what are we responding to, what are we focused on? And what Jens is talking about, what Jens is talking about, Lisa, is basically the days of focusing on 5, 6, a pop-off reopening might be fading now. Now might be the time where we start to price in next year and start to think about the economy there, GDP, starting to fade just a little bit more.
The year-over-year comparison is fairly easy when it comes to GDP. It's what happens on a longer trajectory at a time where there still is a lot of angst, and not only that, but also really high unemployment in the younger populations, which is causing a lot of stress internally. So a lot of questions, which is also the reason why I think one of the most notable moves is just how much oil prices have declined over the past couple of weeks, despite the reopening that people talk about.
Just to go through the earnings calendar, just briefly, tomorrow, Google, Microsoft, Wednesday, Meta, onto Thursday, we get Amazon. Then early next week, in fact, I believe Thursday, we get Apple next week.
We haven't even mentioned it. The Bezos restructuring or the pandemic restructuring at Amazon is maybe the great story we're not talking about.
Well, the post-Bezos
restructuring. They have to report on this. I have no idea what we're going to hear from Amazon. I have no clue, other than they're going to raise the Prime thing. They're going to raise the Prime thing.
Again.
$10.
How much is that now?
It's a lot. It's ginormous. It's like 100-something a year, right?
I think something like that, yeah. They take that from me annually, I believe.
Do you know what the currency of Azerbaijan is?
No.
The manat. M-A-N-A-T.
Why are we talking about that?
Because F1 race. We got to come back and talk about it.
You want to get over there for that?
I think it's cheaper than Paris.
Which race is that? Baku?
Baku.
Very cool. Street race, I believe.
Like Monte Carlo.
Very tight corners.
Oh, very cool.
Just have a look at it. Equity futures right now down 0.2% on the S&P 500. Yields are lower by 3 basis points. Your yield on a 10-year, 353.94.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Possible presidential candidate Ron DeSantis met with Japan's Prime Minister Fumio Kishida in Tokyo. It was a chance for Florida's Republican governor to burnish his foreign policy credentials. DeSantis said he appreciated Japan's efforts to boost its defenses. Japan has increased military spending, in part due to China's threats toward Taiwan. The U.S. has asked South Korea not to boost chip sales in China if Beijing bans U.S.-based Micron from selling there. That's according to the Financial Times. Beijing has launched a national security review into Micron, one of 3 dominant players in the global DRAM memory chip market. Now, South Korea's Samsung and SK Hynix are the other 2. In the UK, Prime Minister Rishi Sunak's government will try to fill the void created by the implosion of the country's main business lobby. Sunak meets today with about 200 of the UK's major business leaders and investors. That comes after dozens of companies quit the Confederation of British Industry. There have been allegations of rape and sexual misconduct against CBI staffers. And it's the end of the line for Bed Bath & Beyond. The home goods chain will close all of its stores and liquidate inventory over the next 2 months. A turnaround attempt failed, leading the company to file for bankruptcy protection. Bed Bath & Beyond employs about 14,000 people in the U.S. and Puerto Rico. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
A lot's happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
A lot of these areas still have very, very good valuations.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot. We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Growth continues to slow, and that continues to pressure profits and put us further into this earnings recession that we've already been in. Nothing's collapsing. There's a lot of fears of, the carryover from the banking crisis and things were going to fall apart. That's not the case, but things continue to get worse.
Fantastic to hear from Dan Suzuki there, the Deputy CIO at Richard Bernstein Advisors. Welcome to the program this morning. Lots of tech earnings in our future this week. A little bit later on this afternoon, you're going to hear from First Republic. That was a bank that got into a lot of trouble in the first quarter. We'll put some numbers on that trouble in just a moment. And Tom, we can put some numbers on the trouble over at Credit Suisse in the first quarter.
Really, let's get to that in a moment. I want to go back to Dan Suzuki. I think it's so important, John, because that's a sentiment out there right now. And Ben Laidler nailed it in his morning note. He says, look, we're all talking about this equity mumbo-jumbo amid the poor sentiment, like we heard from Richard Bernstein and like we heard from Dan Suzuki.
So RB are pretty clear on this, where they think the outperformance should come from, and it's not where the outperformance has been, which is tech. They've been pushing back against that all year. They think it's time for new leadership and a very different equity market to be invested in.
Some of the emotion we'll give you here, folks, through the week, exciting week. I'm going to take it all the way over to May 4 and the Apple earnings as well. We have to have team coverage here of what we do in Switzerland. It's always the case. And what we know is when the Amex comes out, Manus Cranny always ponies up for the Zurich $25 bowl of parsnip and coriander soup. That's how expensive Zurich is as they lay off a gazillion thousand people. Manus, let's start with Credit Suisse behind you and UBS off your right shoulder. How many bodies will go out the door?
Probably an awful lot more than you, myself, Tom, and John anticipate. The original plan for the dissection of this institution was around 9,000 jobs. By the time the new incumbent, or the returning incumbent, I should say, Sergio Monti, returns to UBS, many years ago, he sat down in an interview and he said, I've got to lay off nearly 10,000 people. It never quite got there, but the risk is this. The duplications are profound. The numbers will be much more than 9,000. And if you and your audience want to understand the smell of fear, it's in the price tag of 61 billion Swiss francs walked out the door of Credit Suisse. Those are the fee-generating assets. That is nowhere near as brutal as the implosion in the fourth quarter, which was a stench of liquidity or lack thereof. So the 60 billion is nowhere near what the market anticipated. Look at UBS's stock price. It's up 2%. Question one to Armati tomorrow. What did you get from the institution here that has seen over 170 billion go out the door in the space of 6 months? That's the risk to the trade. How do you stop the rot and stench, draw a line under the stench of the exodus?
Manus, I have to say, just to jump in, and great to catch up with you, buddy, as always, that number that you put on the fear of Q1 was much smaller than I thought a lot of people think it would be, $69 billion. And I just wonder, Manus, what you're hearing people saying about this. Did the regulator get too scared? Because when we all watched that news conference, it didn't sound like $69 billion of outflows. It sounded like a heck of a lot more than that.
It did. However, I think you got to look at some other numbers. Jonathan, sorry to be boring about it rather than my sort of usual verbosity. God forbid that I would be verbose. Credit Suisse had to draw down over 100 billion in liquidity, and they have warned very, very clearly there would be further substantial losses, and that the liquidity lifeline that was given to them by the government is something that they may well have to tap again. Be very clear. There are two very different types of money that go out the door. One are deposits. Flick of a switch on Swift, it's gone. It's gone within minutes. It's gone within hours. The more important set of assets that we need to consider are those sticky assets, which are part of relationship, which are inherent in the institution that has been around for 160 years. This is one of those Damascene moments where every wealth manager in the world, every young guy and girl who's trying to build a book, they're knocking on the door. This is the moment when the risk to this institution is that not just a dissipation of assets under management, but that it rolls up into something much, much bigger. And that's the risk to the big trade, Jonathan. You're bang on the money. 60 is less than the 100 that was on the street. That's what we anticipated. But deposits, the rich don't hang around when they smell fear. 57% of this outflow is deposits from wealth. 9% of wealth walked out the door.
Well, a lot of other people walked out the door too, Manus, including a lot of the talent on the money management side as people try to gauge whether or not UBS is going to offer Credit Suisse individuals jobs. So this really is my question. What did we learn over this particular earnings season about how difficult the integration process is going to be for UBS and how they will want to potentially expedite it?
So you have one individual here. There are many individuals, but I will focus on Iqbal Khan. The pressure on him is going to be immense. This is your moment. You are the sole leader of wealth management as it stands at the moment in UBS. We understand he's already been on the road in Asia. And make no bones about it, Asia is going to be the battleground for those super wealthy across China, Hong Kong, and Asia. To keep them is to keep the Ballon d'Or. To keep European money is something which is probably a lot harder to prize. And believe me, I've tried to prize the odd billionaire in my career to move with me from one institution to another. The road to hell is paved with good intentions. They promise you a lot, and a lot of them did not deliver. They owe me.
Manus, what are the good intentions of the Zurich and the Swiss people? There's a canton independence. There's a less federal structure, maybe alluding for Americans to Canada. How does Swiss domestic politics play into what's going to go on back and forth of those two buildings behind you?
Politics is, it's a dirty business, isn't it, Tom? It's a dirty business in every country in the world. So politicians must be seen They must be heard, and they must defend the people. But the reality of it is, as much as the politicians may jangle the keys of angst in the government here, the reality of it is this institution would have gone under. Okay? These were the cantons that pulled liquidity. The small banks around here and that permeate around this nucleus of Zurich where I'm standing, they pulled the lifeline. They pulled those counterparty, let's say, lines. That's what really invoked the downfall of Credit Suisse. Counterparty reaction. You saw it in 2008, and the politicians have got to sound as if they are standing up and doing the right thing, to be seen to do the right thing. That is their job. But when the hurly-burly's done and the battle's lost and won, there's only one victor. Well, actually three. Amati, Kelleher, and Khan.
Hey, Manus, just absolutely phenomenal reporting from Zurich. Thank you, sir. Manus Cranny in Zurich, Switzerland, covering Credit Suisse today. Tom, UBS tomorrow.
UBS tomorrow. Lisa mentioned this as we got ready for the show. Maybe that's way more important than the sadness of a bankrupt or taken out at Credit Suisse as well. What's important there is Manus's street cred, his Wall Street skill on a global basis. And he's seen this before. I mean, DLJ and Credit Suisse years ago was as clumsy as they come. This is obviously in a far more emergent condition, but this stuff is a mess.
A big mess. And to some extent, the numbers today, Lisa, inform the conversation we'll have tomorrow. It's about what kind of institution you've bought. We understand the numbers from UBS's side of things, what they paid for it, but the state the bank was in when they took it over. Got a better picture of that today.
Yeah, and perhaps it wasn't the worst case scenario, but still you see flight, and you also see some hesitance to keep working at a place where supposedly you're going to have an integration process that's going to cause a lot of layoffs and it's going to take potentially 4 years. You have to wonder what people are thinking when their managers over at Credit Suisse tell them to treat UBS still like a competitor. I mean, at what point is the message kind of getting a little muddy?
What I would emphasize, John, is these are